All right, guys, looks like it's 7 o'clock. Welcome back. Looks like we've got about 13 people in the class tonight. Kind of see where we're at. I guess we didn't meet last week. And I checked in Connect, looked at the grade book just to see who had submitted the Chapter 2 assignments. Again, the Chapter 2 assignments are not due until Sunday, but we will definitely finish Chapter 2 tonight and also transition into Chapter 3, because you'll see that there's a lot of repeat stuff in 3. So it'll be a nice transition, hopefully. But the first part tonight, I'd like to at least focus on wrapping up Chapter 2, just to see if there's any issues. I'd like to work through another problem with you. And then, of course, if there's something you're not seeing, let me know. Feel free to always email me. Even before class, I was thinking, since we meet once a week, throughout the week, if something comes up that you would like me to go over during class or in class or something that you've seen, just email me, send me a message, and that'll help me plan part of the night just to kind of help, illustrate some of the things to help you guys learn this stuff. But again, tonight, where we're at, it's hard to believe. I believe this is the start of week 4, even though it's our 3rd meeting since Labor Day we don't meet. But this is really already the 4th week of class, which is kind of crazy. But in a moment, I'm going to put up a problem and we'll take a look at it. But again, my goal tonight with you is to try to assess to make sure you're getting this. But to wrap up Chapter 2, because you need the fundamentals in Chapter 2 really to be able to comprehend what's going to happen tonight in Chapter 3, where we're going to add some more rules into it. But before I start, were there any issues or questions? Any Connect issues? Anything I need to know about? Just a kind of couple minutes before I start here. Anybody? Life is good?
Well, I mean,
Philip?
I don't know. It feels like I tried to, put it in the access code, and it tells me it's already been used. Then again, I had already, because I had already tried to put this in at the public library, so maybe that's why. I don't know.
So you had an access code issue?
Yeah, I tried to put it in here at home, and it won't let me put it in since it's already been used. And I think that maybe because earlier I had I put in the code in the library, and that's why.
Are you talking, Philip? Are you talking about the access code that you purchased, or is it like a temporary access?
What do you mean by contemporary?
I'm muted, right?
That maybe you can email me. I'll take a look. I'm not really sure what would be the problem there. It could be a browser issue. Email me, or even after class, I can stay after. Let me know. I'll try to help you out with that. Were there anything else going on with Connect? Any issues?
That's about it, I think.
Has anybody been taking advantage and looking at the homework videos I've recorded?
I have. This is Daniel Jackson.
Daniel, I hope you find they're helpful. I don't know if you do. I mean, what I tried to do is I went through all of your homework assignments in Connect, and I've actually tried to illustrate or at least comment on how to work them.
Where are those located at?
Blackboard. Lauren, yeah. You just go into Blackboard and go to the learning modules, each chapter. I put all the videos in each chapter module. It's just under the learning modules.
I've got a response to looking at, I think it was Chapter 3, going through the homework exercise. After I complete some of the exercises and get all the green lights, it says that the problem still has not been completed.
Daniel, did you hit the submit button?
Yeah, and it tells me that the exercise that I've gone through have not been completed.
Now, does it give you any sort of like red X's?
No, all of them are green.
Oh. Okay, so if that ever happens, if you can send me an email, and if that happens to anybody, I can take a look at your individual assignment, and then I can assess what's going on and let you know. I can just do that individually. So if you feel like, you know, you've completed everything and you're just don't understand what else you need to submit with it, you know, to get your 10 points, email me. Just say, hey, look, Mr. Driga, I've got a problem on chapter 2. I don't know what's going on. I've submitted it. I'll take a look at it. And I've had, and that happens. I had a student in one of my online classes had something similar. They had worked a problem and they thought they had submitted it. They had watched my video. They were confident that they had done everything to get their points. Yet in Connect, it was showing up as if they hadn't done something. And when I went in and looked at their individual assignment, it was, you know, it fell out pretty easy for me because I saw they just didn't enter a title. It was just, it wasn't really the actual application, but they didn't enter the title on part of the assignment, and that's what part of the problem was wanting them to do. They just didn't know they had to do that. But usually it's a case-by-case situation. So like Daniel, if that's happened, if you just email me and just indicate in the email, you know, which problem you want me to take a look at, I'll go and look at it and I'll get back to you really, really quick. Usually on stuff like that, in my morning class asked me how often do I check emails. I mean, usually up until I go to bed. So it's not uncommon for me to reply to emails even up to about midnight. I'm usually up till about midnight every night. So don't feel bad if you're emailing me late. I'll probably get it right away. But knowing that you have due dates, I try to respond as quick as I can to give you some feedback. And if there just happens to be a glitch in the system, sometimes that does happen. I always try to make sure that it doesn't hurt your overall points.
Okay, let me say this. I had gone ahead and looked at chapter 3.
Okay.
And did the homework exercise, and 7, 8, and 9 are giving me the indication that they're not complete.
I'm guessing, Daniel, that could be, if you go back and look, are those T account problems?
Okay.
Yeah.
I'm guessing, and this is just without, because I had a student in my other class had the same problem. They just didn't enter the title to the account. That's the only thing they did wrong. They had all the transactions analyzed, but they just forgot to put the title, like cash should be the title of a T account. They just forgot to put the heading on there, and that was it. But again, I can go in and take a look at it, Daniel. Let me make a note.
I know personally right now I'm having trouble finding time, but that's just because of work. I work in a nursing home, and right now we have positive COVID patients, and I'm doing a 14-day stretch so that we minimize exposure. And so I've just been trying to find time to do anything.
Jay, are you taking multiple classes?
I'm only taking one credit hour class, and then I have oral communications, which isn't that difficult. This is honestly the hardest class that I'm taking right now.
Well, and it takes up time. Yeah, if anybody else is having problem with time on this, some things, just some suggestions, what I would say everybody ought to be doing is to, number one, remember that all my videos, all my lectures have been recorded ahead of time. And sometimes if you say, hey, look, I don't have time to read the book, that's fine. Watch my video. Because most of the time, you're going to be learning this stuff when you practice the exercises in a Connect anyway. So lots of times, if you try to do that, that might help you out a little bit on time. But, you know, it just kind of gets to the point. I think I said for this class, I would say on average, every week, you're probably spending anywhere between 10 and 15 hours a week just on this one class.
Easily, yeah.
Are you finding, Jay, are you finding that to be true in terms of your time?
Absolutely, yeah. Like between reading the book, writing down my own personal notes, doing the homework, working on the quizzes, because especially now since they're all written out and everything, it's a lot more actual pen work. But I figure if I have any issues with timing or anything, I could always email you.
You can email me, and just remember, I mean, I tried to hold you guys to these due dates on the assignments. You know, I'm pretty flexible throughout the semester. I think you're going to find, though, and this is for everybody, is that once we've kind of gone up through, let's say, chapters 5 and 6, that's really the content of the whole semester. And so anything after that is just going to be repeat stuff. So right now we're still in the phase of we're applying this accounting equation, which we're going to do here in a minute. And then we're going to take that one step farther when we're going to tack on the rules of debits and credits tonight. But before I don't want to get to that just yet, but my point is the more and more you'll spend with it, you should get more comfortable with it. And just don't get frustrated. And, you know, if there's ever a work issue or something happens, I've had several issues this week with either Connect access code or people who wanted an extra day on the assignment just to try to get it in. And, you know, I can work with anybody on those. You just have to remember we do have 16 weeks. We got to get it all in anyway. But, you know, once we get to that point, you know, I can work with anybody on their time a little bit, but, you know, I still have to get through the heart of the core material. And, you know, I can't spend another week just on chapter 2, or that's going to kind of mess up, you know, the whole semester because there's much more stuff to cover. But 2 and 3 are pretty much foundation chapters. And once we get past 3, which we'll kind of get into a little bit tonight, I think most you'll start to see there's a lot of repetition. And then when you go and practice it, just remember when you practice the Connect homework, you can always go back, watch my videos. And since I have them linked up to YouTube, you can fast forward them. You don't have to sit there and watch the whole thing. You can fast forward them back and forth, hopefully pretty easily on your computer browser. But yeah, I mean, time is something that, unfortunately, with this type of subject, because it is kind of a unique language, it does take you time, at least I think early on, a little more time just to kind of learn how the stuff is written. But hopefully once we're into maybe week 4 and 5, once we get a little bit farther into the semester, week 6, hopefully you'll start to feel more comfortable with reading the problems. That's the hope, at least. But yeah, I'm here to help. But yeah, Jake.
I've noticed a big help is that the Connect has an app that you can download and that you can read the book, and you can also do the homework assignments on it as well. It's essentially the Connect website, but they have their own app for it, and that's been helping me because I'll go over it on my downtime at work.
Yeah, and for anybody, you just have to kind of find your own. You know, everybody learns a little bit differently, and that's fine. My personal learning style is I like to take notes, and then when I work out problems, I take notes on stuff I miss, and then I typically go back and review all my notes. I like to write stuff down. That's just over the years, that's how I learn. But some people can just watch it and do it a couple times and connect and get it, and that's, you know, that's fine too. So don't feel bad. Just remember you have all the recordings. Hopefully you have access to those, and then email me. I found out, you know, our department is now what they call a district-wide department, and I believe there are tutors online as well that you can access for this class. So we didn't have it set up at the start of the semester, but I think at this point, I believe there is somebody or an individual or more than one individual that could do some tutoring, and it's free. You don't have to pay for it. And just have to let me know if you need some extra help other than, of course, you can always, you know, get help from me, but if you need some tutoring help as well, I'm just going to let you know that is available as well this semester. So email me if you need some help with that, and I can kind of get you set up with anybody you need to talk to on how to do that. I think they do it through Blackboard Collaborate, I believe, if anybody's tried that. Diane, have you tried that?
I'm sorry, what did you say?
Yeah, I thought you said something, but I think they do it through Blackboard Collaborate is how they do that. So
I went ahead and looked at the definitions of temporary and permanent accounts, and it's not totally clear to me. And I sent you an email to kind of speak about that today.
Right. Well, Daniel, that's a good question. We haven't actually got to that just yet. That's in chapter 3. But
yeah, I mean, when we get to it tonight.
I promise you I will go over it.
Okay.
All right. I think I sent you an email just to the basic differences between that, but that's going to become more of a player when we get into chapter 6, really. Because it's not till chapter 6 when we get into the closing and applying the concept of closing out a temporary account versus a permanent account. But they do mention it in chapter 3. So I definitely will address that. So, okay, guys. So I just want to see where everybody's at tonight. As I go through some of the stuff with you, I'm going to share my screen in a minute. Just let me know if you have any questions. You can stop me as I'm going through a transaction. If you want me to try to clarify it or say it in a different way, just let me know. And I'm just checking my computer settings. So we are recording. So everything on here will be posted later once we're done. Okay. All right. So let me do this. Get my screen up. All right. Hopefully you can see this now. And what you're looking at is this is problem 2.1b. And I've kind of minimized my screen because there's only 11 transactions. And then I put up, here's my template, which is the same as it's the same template that I used last week with 2.1a. It's the exact same problem. It's just that they changed the number. So just to kind of see where everybody's at, if you are understanding this problem, this is again 2.1b, if you're getting this tonight, then when we transition into chapter 3, guys, it's going to be the exact same transactions. Nothing's going to change. All right. So if you got this part down tonight with chapter 2, you'll at least understand most of chapter 3, other than the new rules I'm going to throw at you with what they call debit and credit. So don't, again, we'll get to that later. But for now, I'd like to kind of start with this first one. And all I'm going to do in this one tonight, I'm just going to do the transactions on the accounting equation. Because of our time, I'm not going to do the financial statements, but I just want to see where we're at. If there's something you're not seeing, you can let me know with any of these transactions. These represent just about all the different types of transactions you're going to encounter on quizzes and exams. All right. All right. So I'll start with the first one. And again, let me know if you're not seeing it. If you can't see it, I can change the size of this. But the first one says the owner invested $72,000 in cash to begin the business. All right. So hopefully you've learned from last week, we all know that's an investment. And when we go to the accounting equation, we have to identify what accounts are affected: assets, liabilities, or equity. And of course, an investment is an equity transaction, and they say that there's cash. So you should get from that is, we know cash is affected and equity is affected. And so if I start with cash, we simply say, and this is kind of what we were doing last week, you should say cash should be what? Increasing or decreasing? Anybody?
Increasing.
Very good. So all I do is I just type in 72,000. And of course, if you're writing this one out, you just draw a piece of paper horizontally and write this out, but just increase cash 72,000. That's all you do. And then I go to capital. I already have it set up. There's my capital. And I enter increase 72,000 because remember, the equation has to balance. Okay. And so that's typically the first transaction most of these problems start with, is they like to start with an investment. So basically saying you're beginning the company. Okay. Now, once you've done that, everything else, you're going to see some movements. You'll see different assets being affected. You might see liabilities affected. And you also might see the revenues, expenses, and withdrawals affected. And that's what we're practicing again in this problem. Okay. So when I look at number 2, it says purchased equipment for $32,000 in cash. When you read that, you should identify that there's 2 asset accounts affected. One is equipment, the other one is cash. If I go to my equation, I've got cash and I've got equipment. And so obviously you got to be saying one account is increasing and another account has to be decreasing. They have to offset each other, otherwise the equation will not balance. So if I start with cash, you should all say what? Cash is doing what? Anybody?
On a decrease.
Decrease.
Decrease. Very good. Decreasing. So I'm going to put a minus 32,000, and then I've kind of pardoned this. The format I have here in Excel, it puts it as a bracket, but that means minus. That means negative or decrease. So if I decrease cash, then what do I have to do to equipment?
Increase.
Very good. All right, so let me pause right there. Are there any questions or issues on any of these 2 transactions? Anybody?
Nope.
Not yet.
So however I should ask this question, is everybody getting this part at this point? Is anybody not getting it?
Yeah.
Yes.
Yes.
Just so you know, you're breaking up really bad.
Yeah, I could hear you, but you're breaking up. Yeah.
Is it my voice?
Yes.
Probably your mic or something. I don't know.
I think
I know you had connection issues before, so it could be connection issues.
is it better now?
Nope.
No.
Is it worse?
Oh, now it's better.
Okay. I think next week I'm gonna have Jay. I think I'm gonna do what you're doing. I'm gonna have to
Oh,
get.
you're breaking up again.
Okay, I apologize. I think this week I'm going to order a headphone. I'm going to get a headphone. I think once I get that, I think it'll improve it. Okay. Let me see if I can move my thing a little bit closer. Does that help anything? Is that a little bit better?
So if you slow your speech down a little bit, see if that pick up each word.
Am I coming in clear?
No, you got a
No.
garble.
No, you just staticking a lot.
Yeah,
I
it's
would
very
almost
static.
turn your
Very staticky.
mic back up. That might have been the problem. I mean, not the full problem, but it's almost worse now than it was before.
Was it worse than 2 weeks ago?
This is the first time with this problem.
Okay, first time. All right.
Say, and it was fine at the beginning of the session.
Oh, really?
Yeah.
Just now, right? Let me try something. It might be the fact of how I'm sharing my screen. Let me do this. Give me a moment. I'm going to change my screen a little bit, and because right now I think what I'm doing is I'm using a different screen. So let me see if I can't do a couple things. I'm going to have to pause this for just a quick minute, and then I'll see if I can't just speak directly rather than looking at my other monitor. Let me see if I can just look at one monitor as I go through this. I'll have to kind of go back and forth on my screen share, but that might help. That might help with what's going on here. Give me just a quick minute. I'm going to change this up. Hold on. All right. So right now, I just went back, and all you should see on your screen right now is should say problem 2.1b. Does everybody see that?
Yes, sir.
Yeah, but
Is
you're
my
still
voice?
breaking up.
It's still breaking up.
Yep.
Yes.
Let me check my audio. Hold on just a second.
It may sound weird, but if you have a pair of headphones that have a mic attached to them, like what comes with old phones or like an Android phone, you can plug that into the computer and it should work as your mic as well.
Is anybody having static problems just looking at it from their phone?
It is kind of breaking in and out.
So you're all using laptops or PCs,
Yeah.
Yes.
Yeah.
and it's still coming in a little staticky.
A little choppy. Coming in and out. Like,
Well, let me do this. Let me end.
Now that's better. That's better. What you're doing right now is better. It's clear.
It's clear now?
Yeah.
Yes.
mm-hmm.
I didn't do anything.
I do think it's your internet connection because your screen, like your picture, will also get more pixelated
Okay.
along with your voice. So it's probably your connection.
It might be, not that anybody cares. It could be because, see, at my house, we don't have, we have everything through our internet. So my wife's got my two little ones upstairs right now, and if they're watching a movie, it might be, I don't know, they might be taking up my internet space. I'm gonna have to talk to them about that.
Yeah, that'll take up your bandwidth and it'll slow down your internet connection.
And that might be causing my voice to be staticky.
You're fine now.
Okay. Well, I'll keep going then, and yeah, but please, guys, let me know. I mean, and I'll try to check next at my break. Well, at break time it won't matter because at that point my kids should be in bed. But it's like, yeah, I don't know. But yeah, I'll watch my internet. Let me get this back. Would you guys prefer to see both of these problems on one page, or is it better if I just kind of go back and forth? Does anybody have a preference?
No, both of us better.
You like
You
it
can
on
go
one?
back and forth for me.
It's the back and forth for me.
Is it easier?
I prefer the one page.
Yeah,
so
me
that it's
too.
all
One page.
available to see so you can cross-reference.
All right. Is it easier to see? So let me go back. Hold on,
I
let me
think
try
you
that.
should have both of them on one page.
Okay, let me try this again. I'll do another screen share. So you're saying, is that easier for you guys?
Okay, you got both of them up now. You
Okay.
got the
Yeah,
Excel.
that's good.
All right. Okay. So let me know if something, you know, I was in a Zoom meeting a couple weeks ago and we were having the same problem. And the host of the meeting, he even had all the latest gadgets. He had the headphone, he had the iPods, everything on, and his voice kept on screwing up. And then I forget how he fixed it. I think eventually he just logged out, logged back in or something. But Jay, I think you might be right. It could be an internet problem, internet connection. I'm looking at my pixels. It looks like it's good right now, but you know, if I ever cut out, just somebody let me know and I'll go back and say it again. I don't want to make sure that you guys miss something. But,
You can always
all right,
go online and do a speed test to
Yeah,
see
I'll
how
do that.
your stuff's going.
Well, I got the Charter thing. They tried to market it like Charter's the best, right? I don't know that there is a best. I used to have AT&T and I hated it.
They're
Right.
definitely better than AT&T
AT&T.
because I hate AT&T.
I have
My internet
AT&T, but we
sucks.
have the fiberglass
Mm-hmm.
in our neighborhood. But you also have to choose which package. Like right now we have the like unlimited speed because we have 6 people here and one of them works from home and I'm taking classes. And so we need that bandwidth to do
Right.
everything.
Yeah, I had to upgrade mine too. My boyfriend works on phones in the basement, and we had to increase the speed and connectivity.
But we've had no issue.
Okay. I think my other issue, the only other thing I might be able to fix is because I'm on the wireless right now. I'm not directly connected to my router. And I think if I would directly hook up to it, it might be different. But with my scenario right now, it's easier for me. I'm in my basement right now, just because it's easier for my wife to kind of take the kids upstairs so they don't make so much noise. But maybe I'll try to figure something out next week on that. But all right, let me get back to this. I think anytime you're directly connected to the router, it's better. But right now I'm on the wireless. So, all right, guys. So everybody's okay with the second transaction. There's no issues up through number 2, right? Is that correct? All right.
Yep.
Number 3, it says we purchased $12,000 of additional equipment on credit. Notice when you compare 2 and 3, they're both buying equipment, but on number 2, it was cash. In number 3, it says on credit. Now, they could have also said on account, and it would mean the same thing. And what that means is that we didn't pay for it yet. It's like they're giving us some time period that we can then have to make the payment later. So when we go to the equation, we know we've got equipment, has to be affected. And then we know it's not going to be cash, but it's got to be accounts payable because that's going to be the liability account that we're increasing. So if I go to the equation, this is number 3, we would say equipment, it's just like number 2. So it's got to be increased. And then I will go to accounts payable and say increase as well. That's how you do that.
Yes.
So I'm just trying to do a little, as I go through these, I'm just trying to do a little bit of contrasting and comparing just to show you how they're similar and how they're different.
It's staticking again. Oh, God.
Is it still static? How am I hearing it coming in right now, okay? Let me try this. I'm gonna go ahead and click one more thing. I don't know if it's gonna work. I'm gonna go ahead and say mute everybody except me and see if that helps. Okay, and then of course you could always unmute yourself. But let me try that. And then once I do that, tell me if my voice is still coming in statically. All right, so I just muted everybody. Do I sound any different?
A little.
A little, okay. I'll just do my best. Again, you know, I'm limited right now in terms of what I'm using, but I'll definitely, at least maybe for future classes, try to get a headphone. That might help a little bit. I don't know.
See, now
Cool.
that sounds better. I don't know what's going on.
Yeah, it's, well, technology. So, all right. So I apologize, but let me see if I keep going on this. And then if there's something you want me to go back and repeat, I'll be more than happy to do it. Okay, number 4 says paid $6,000 in cash to creditors. So we know we've got cash. And who are we paying? We're paying the people that we owe money to. So if I go to my equation, that means that we're going to be paying down our accounts payable. And we're paying it, of course, with cash. So if I go to cash, everybody, we should say what? Increase or decrease?
Decrease.
Decrease.
Very good, decrease. So minus 6,000 cash. I then go to accounts payable, and I should say what? Increase or decrease?
Decrease.
Very good.
Increase.
Okay. Any issues on number 4 with anybody?
No.
We're good. All right. Number 5. Owner made an additional investment of $12,000 in cash. So what happens to cash? Increase or decrease?
Increase.
Increase.
Very good.
No.
And then what happens to capital?
It's
Increase.
increase.
You guys did, okay, very good. Everybody who has an idea, again, if you're not seeing it, please send me a chat or let me know. That's
Wait,
up.
so why is it increasing again? I missed it.
Okay, number 5.
Yeah, number 5.
Cash is increasing because the owner is adding money to the business. He's basically going to the business bank account and depositing money. He's putting money into the business.
Okay.
And so when he does that, cash has to increase. And then the offset goes to the capital. The capital account is the account that we use for investments. And this is considered an investment. And remember, it's that separate entity assumption that you don't commingle your personal records with the business records. So if the owner wants to write a check to the business to add money to the business account, he can do that. You just simply, go to the bank, or you can do a wire transfer, but you have to show an increase to cash, and then the accounting records to make sure the equation balances would show an offset to the capital account as also an increase. Okay, and so number 5 is the same as number 1 in terms of what they're doing. Okay, Tanisha, does that help? Was it or
Yes.
somebody else? Okay. All right, next one, 6. In fact, on the next 2, look at 6 and 7. They both say perform services, okay? So we should know at this point that that means revenue. And so on number 6, it says cash, and on number 7, it says on account. So let's deal with number 6 first. You got cash revenue coming into the business. So if I go to my equation, this is number 6, cash should be doing what? Increasing or decreasing?
Increasing.
Increasing.
Very good. And we know it's an increase because by definition, if you have revenue, revenue is really inflows of cash, inflows of money. So that should be consistent with the definition of revenue, as means money's coming into the business. And
So
then,
perform services is always revenue?
yes, for this type of business is a service business, a service industry. If this was like a merchandiser, then they would be selling, they would be saying you sold merchandise, okay? So this is just like a contractor. It could be a lawn mowing business. It could be something that's providing a service. So when they say performed, meaning you did the work, that's going to be revenue, okay? Now, I got the capital, revenue, sorry. And of course, revenue at this point, we're always saying increase. Revenue increases and cash increases. Now, if you look at 7, it's still revenue, but here we come again. Here we go again. It says on account. So hopefully you remember from last couple of weeks, if you looked at it, that means accounts receivable.
Mm-hmm.
That means that whoever we did the work for, they owe us money.
Right.
And we were okay with that. And why would any business want to do that? Well, typically it helps you run your business. If you give your customers time to pay, like let's say within 30 days, that establishes credit. Now, of course, not talking about the accounting aspect of it, you guys all know that's risk, because there's always a possibility that you could have a customer that does not pay. That does happen. And we will deal with that in chapter, I believe it's chapter 12. That's later on. We got some issues.
Okay,
But yeah, go ahead, Diane.
I have and that's the part where I get confused. Like I can do the whole thing, but I get confused on when it says to perform services on account. I know it's accounts receivable. The part that I get confused on is it always added or is it minus?
Okay.
That's where I get confused at.
Okay, so at this point, just so you know, it's always going to be increased. You're always going to add it. Okay, think of it like this: it's a future, it's future cash.
And so,
go ahead.
So it becomes future cash and revenue too, right?
Well, here's what's going to happen. Right now, we're going to say increase accounts receivable, and we'll say increase revenue. Okay.
Okay.
The only difference between number 6 and number 7 is that in number 6, we already got the cash. We're happy.
Okay.
In number 7, and I'm just speaking just in layman's terms, there's always risk in business. If you take an intro to business class, they will always tell you that you can never eliminate risk. You can mitigate it, you can reduce it, but you can never eliminate it. So there's a possibility that of that $7,300, we could lose it. But we don't know that just yet. We still plan on collecting all of it, okay? So what's going to happen is eventually, let's assume we're going to collect it. Eventually, that $7,300 will move over to cash, okay? We've already got the revenue. So whenever we collect it, we're not going to record revenue again. We're simply just going to record the increase to cash, okay? So for example, and again, let me just make this up. Let's say on the next exercise, let's say that the problem said you collected your cash. You collected from your credit client, which is usually how they say it. What'll happen then is you would say increase cash 7,300 and decrease accounts receivable.
Okay.
That's what's going to happen eventually.
Okay.
But that didn't happen yet. But they do something in transaction number 9 where it says you receive some cash. That's what'll happen. Eventually, we want that 7,300 to move over to cash.
Okay.
Okay. And that's what's going to happen later on. Now, part of that will happen in number 9 when we get there. But that's, I mean, just to stop right there. That's what happens with businesses with credit. Usually, you don't typically, nobody pays cash anymore. Just, I mean, when these problems say you paid cash, in today's terms, that's, small businesses, yeah, but most of the time, if you're a bigger company, most of the time, money moves through banks, wire transfers, electronic deposits, electronic transfers. And the reason is that nobody wants to handle cash. That's too much of a risk. If you have people handling cash, you have people that, there'll be theft, there'll be miscounts, and it's just not a good thing. It's much more secure for businesses to say, hey, look, I would rather perform the service and have you pay me in 30 days, just send me send it through the mail, rather than you pay me all the cash, because that's a risk. If I've got cash and I lose it, then that's my fault. Okay. So, but it's still, I'm not going to say that people don't still use cash. They do. I'm just saying, generally speaking, a vast majority of transactions would happen with non-cash. All right. Number 8, paid $5,200 rent expense. So when it says paid, that means cash. So you should say cash is what? Decrease or increase?
Decrease.
Decrease?
Decrease.
Decrease.
You got it. So minus 5,200. And then I go over to my expenses. And just for now, because later on tonight it's not going to matter, just for now, I always put minus 5,200. Every time I have an expense for right now, I'm putting minus, because I want to make sure I emphasize that that the expenses are reducing equity. You need to know that. That's a big deal. So always, at this point, always put a minus for your expenses for now. So I've got minus cash, and a minus with your expenses. All right, guys, so now I get to 9, and here we go, 9. It says, received 5,000 in cash from credit clients. So notice we've got 7,300. We didn't get paid everything, but at least we got some money. So I go to my cash, and this is where you're simply transferring it. You'd say, increase 5,000. I'm going to change my font. Hold on just a second. Okay, so I say increase cash 5,000.
Right.
And I say decrease accounts receivable 5,000. Note, here's a big thing. Note, I do not say increase revenue. And that's a common mistake. Because lots of times you'll see something where it says cash is coming in, and you think, oh, that's got to be revenue. Well, technically, we've already recorded the revenue. We're just collecting the money. It's just a timing issue. Okay? So you got an increase to cash and a decrease to accounts receivable. Now, after transaction number 9, let me stop for a moment. That's accounts receivable. We've collected $5,000. So that means that $2,300 are still left to be collected. Okay? And you can better believe it, if it's your business, you'll do everything you can to try to collect it. And so maybe that 2,300 comes in a few days, but at least for right now, you have to show the increase to cash and a decrease to accounts receivable. And of course, you want to always have an accounting system that keeps track of your receivables so that you know who owes you. Okay? I often like to use the illustration like this. If you got an apartment or a house, and you pay your gas bill or you pay the water bill, okay? Guys, we are all receivables to the MSD. If you live in St. Louis here, the water department, you know, until you pay the bill, you owe them money. And every month I've got to pay my water bill. And so if you're MSD, they have an accounting system where they would have an accounts receivable for David Juriga until I pay them. Once I pay them, then that receivable becomes cash. Okay? And it happens real quick, but this is just the behind the scenes of how the accounting systems work. Okay?
Oh, the $5,000 decreased from their pockets?
Yes. Yes.
Okay. Because, yeah, this is the part where I get confused at.
Okay. So, Tanisha, so on the 5,000, what's the issue on 5,000?
Okay, so what's the question on number 9? Receive 5,000 in cash. I understand that. I received the 5,000. That's add. And then you saying accounts receivable decreased. From out of whose pocket?
Oh, okay, so the customer's paying us from their pocket.
Okay.
This accounts receivable though is on our books. We want to show that they paid us.
Okay.
So we have to show it deep. In fact, there would probably be an accounts receivable that would be linked with that specific customer's name. It might say accounts receivable ABC company. And once they pay us, we can then reduce their account so that we know that they don't owe us money anymore.
Okay.
I mean, that's the basic.
But they
idea.
still owe us a remaining balance of $2,300.
Correct. So,
Okay.
so if we stopped right here, and let's say 3 months later they still haven't paid us, we can go to our accounts receivable and figure out exactly how much they owe us. And then at that point, we'd send them a letter, send them some, hey, look, why haven't you paid us? Is there an issue, and so forth. But yeah, you have to keep track of who owes you.
Okay.
I mean, if you think of just like our utility companies, like the gas, like Spire, it used to be Laclede Gas.
Hmm.
You think of your cell phone bill. If you got like a T-Mobile account, whatever. Think of all the different customers these businesses have, and how many places they have to keep track of money that's owed to them. That's where accounting comes in. And so all accounting systems will have something set up where you'll have these receivables where you keep track of who owes you money. And then once you pay your bill, you know, in fact, if you ever look at your bill, you'll notice that your name, you'll have an account number. Typically, it'll be account number whatever. And that's how they identify that it's you and your address. Okay.
Right, okay.
All right. Number 10, two more. Number 10 says paid $6,300 in cash for office supplies. So I go to cash and we all say what?
Decrease
Minus.
in cash, increase in office supply.
Okay, so minus cash, very good. And then what about office supplies?
Increase.
Very good. Decrease. There we go. Increase office supply, decrease cash. Okay. Last one. The owner withdrew $10,000 in cash for personal expenses. So go to cash, and we all
That's
say
minus.
very good.
Increase.
Decrease. And this is that personal thing. You have to go to withdrawals,
Right.
and then just enter. It's just like an expense.
Right. You minus it out.
So just put a minus, and that's it. And then the thing about this equation, again, I'll just add these up. So if I add up all of my assets, you'll note that I get 90,500. And then if I add up all my liabilities and equity items, do this right here, I get the same amount. Now, if you can understand most of what we did in this problem tonight, you're in good shape. And if you don't understand all of it, I mean, you still have to go back and practice. This is 2.1b. You also have 2.2b. Again, these are not for grades. This is just practice. You have all these answers in the book. This is what you got to be able to do in the next couple chapters, is to be able to analyze the transaction, identify the accounts affected, and at least so far, most, at least what you've been responding, seems like you got the right accounts. You're getting it right. You're saying which account is increasing and which is decreasing. If you can get that down now, later on tonight, we won't just say increase cash or decrease cash, because we'll do the same transactions. What we will say is we'll say debit cash or credit cash. That's where we're headed.
Wait, okay, so where is the other 10,000? I didn't see where you put it.
It's withdrawals.
Okay, so what if some of them don't have, like, on the homework, it didn't have like withdrawals. Yeah, it didn't have withdrawals. It just had like revenue, expenses, and capital.
Okay, and you don't always have a withdrawal. Sometimes they don't have not every problem is going to have a withdrawal.
So what category would that fit into if it didn't have a withdrawal? Expenses.
It just be an
Owner's
expense.
equity.
Yeah, it just be an expense.
Okay.
In fact, since I have this up, this is 2.1b. If I look at 2.2b, and I look at all the different transactions in 2.2b, there's 10 transactions in that one. There's not one transaction there that involves a withdrawal. Okay, so
Okay.
I picked this one because this one covers, I believe, all of the transactions you have to do in this chapter. Okay, but it's a good question. If you're doing the Connect homework and you don't see anything pop up for a withdrawal, then most likely is there's no withdrawals. Okay, they're not.
Okay, so whatever happens on one side of it has to balance on the other side. So
Yes.
it has
Or
to make.
Diane, hold on. Or look at number 9. Just look at that. Do you see how you just had cash and accounts receivable?
Mm-hmm.
On that one, the only accounts that were affected were assets. But because it was an increase and a decrease, they canceled each other. Okay?
Yeah, I seen that on one of the homework assignments. I'm like, why isn't it on the other side, like where liabilities is at?
Well, exactly, because in this one, you can have a transaction where only the assets are affected. Okay? This one, you just simply took one asset and switched it with another asset. If you're talking about, like, let's say number 3, where you had one asset and you had a liability affected, and because you didn't pay cash yet, okay, eventually you will pay cash, but at this point They bought the equipment, which is an asset, and then the offset had to go to accounts payable, okay, because that's the only other place to put it. Number 3, you said you bought it on credit, all right? Now, on number 2, they said you bought the same equipment, but they paid cash. So there's another one. You have only assets affected on this one, but the equation, I think, was it Diane? You said the equation is still balanced, okay? You're always in balance. You have to be.
Right. That's what I was saying. So everything that it's not everything has to be done to each side, but when you finish putting in all the numbers, your asset side should balance your liability and owner equity side, because assets equals liability and owner's equity. They should
Correct.
all be balanced.
Very
Okay.
good. Yep.
Okay. All right.
Now that we got that, let me throw one thing at you. And you probably won't like this. You know that we could have everything balanced, but there could still be errors. Okay. In other words, you could make you could make a mistake. You could increase and decrease the wrong accounts. That happens all the time.
Yep. And that's where I once I get to the point where I know where each goes, then I'm okay. It's just trying to figure out, okay, is this in the right account? So right now I know perform services is automatically revenue, but it's also accounts receivable.
If it's on account, yep.
It's on account. But if it's cash, it automatically goes to cash because that's what it is.
Yeah, 6 and 7 are good examples of that.
Okay.
So Diane, having said that, everything up through chapter 6, you will see perform services. You should know that's revenue. You'll see that all the time.
Right.
And it's either going to be cash revenue or credit revenue. It's only 2 possibilities. That's it. Okay. All right. Anybody else on any of this problem? So I noticed again, I looked in Connect before class tonight, and I know a lot of you have not yet submitted the chapter 2 homework, and that's fine. But I'm hoping that, even after tonight's class, don't forget, the due date on just the chapter 2 assignments, you have till Sunday. All right. I extended that due date up through the 20th. Okay. Now, I wouldn't wait until Sunday to get it all done, but I'm just saying at this point, you should be able to hopefully go in there and make a good effort. And then if you get sidetracked and something just isn't adding up, just remember, you do have I've illustrated all the answers for you. You have all the answers already in Blackboard. You just have to watch. Yeah, it's time. Yeah, you got to watch my videos, and you bet it's a lot of time. And that's part of the college experience, I guess. I remember back in the day when I got my MBA, when I got my master's, usually it takes most people to get an MBA or a master's, usually a year to 2 years. And I got mine in a year, just taking a bunch of classes, and it was hard because it was so much time. I didn't have any other time for anything else back in the day. It was just so time consuming. And that's just the way the system's set up. So, when I got my CPA, when you guys go, if you guys get your CPA, you'll find out that the success to passing that exam, you can't just get it overnight. You got to study every single day. It literally, I just say it'll take up quite literally 6 months to a year of your life. So I'm not trying to sound negative, but it's like you lose a year of your life just for that exam. All you're doing is studying for that test. It means that much. But then, once you get it, you're glad you got it. It's going to pay you like you won't believe.
Can I ask one more question?
Yeah.
So when you take the test, how long, if you don't pass it, how long do you have to wait to take it again?
Well, they're making changes to that even right now on the CPA exam. It used to be, the way it works is there's 4 sections, and once you're qualified to take the test, there's an 18-month rolling window. So and I always say you take one section at a time. You study for 3 months and you take one section. You typically get your results back within 3 or 4 weeks. And it might be a little bit faster now. I'm not sure of their timing, but once you pass a section, that's when the time starts. Once you pass a section, you have 18 months to pass the other 3. And what happens is after that 18 months, if you pass 2 of them, but there's one that you still haven't passed, then all of your original scores go back to 0 and you have to start again. Okay.
Oh, wow.
But again, 18 months should be plenty of time for most people to get it. Most people, the way they're trying to change the exam now is that a lot of people can probably get it done in 6 months. Okay. Back in my day, that's how long it took me, 6 months. It felt like eternity, but I was just glad I got it done. But you can do it. It's just, but yeah, and they keep on changing the scope of the requirements to take the test. They're making it easier to take get to take the test. They used to have these months, they called them blackout months, where you couldn't take the exam. They don't do that anymore. You can take the exam any month of the year now, which is good. That's good for you guys. All right, so a couple things. So are there any other questions on just this exercise? This is, again, exercise 2.1b, because this covers all of the transactions that you're going to encounter, not just in this chapter, but also in the next chapter, in terms of the type of problems. Okay, so here's what I want to do. So a couple things. I want to take a break at about 8:15 tonight, because I want to at least start something. I want to show you a couple things with my chapter 3 PowerPoint, a little bit on the debit and credit rules, just to kind of give you something to think about. But again, don't forget, today is what, the 14th? So all of your chapter 2 assignments in Connect, you got a quiz assignment and a homework assignment. They're both due by Sunday the 20th, just to remind you. Again, I'll send out another announcement. So Sunday the 20th. And then tonight, in a minute, I'm going to kind of introduce some of the new rules that you need to know. We'll spend the majority of the second half of class tonight, again, going over the debit and credit rules. And I intend to get at least a problem or 2 in the book to show you how to apply it. Okay. And then, of course, we'll have next week. I think if you look at our calendar, I think I have it built in to spend this week. And then even next week, we're also still in chapter 3. So even next week, we're still doing chapter 3. Okay. All right. So
Are we gonna have homework for chapter 3?
yes, it's all your homework's
This year, this week?
So just to kind of go back, guys, all your homework, you could quite literally complete all your homework. You could attempt it right now. Everything's available in Connect. All right.
Okay.
Just make sure that you follow the due dates. Make sure you get them in by the due dates. For every chapter, you have a homework assignment and a quiz assignment you have to submit in Connect. Okay. And the way I built this class is that even though this is live virtual lecture, you can all work ahead of me if you want. And I think somebody earlier said tonight, they've already actually attempted the chapter 3 problem. They've already at least attempted some of the chapter 3 assignments already. And if you look at the due date in Connect, the chapter 3 assignments are not due until the, September 27th. So again, every assignment is available, except you just have to make sure you get them in by the due dates. Okay. All right. So chapter 2 stuff is due by Sunday. And then here in a moment, I'm going to change my screen. And I just want to tell you, we're still going to be looking at the same types of transactions. But like I said earlier, here's the last thing I'll say, and then I'll get the slide up, is that if I look at this problem right here, I'm just going to show you the equation. The only thing that's going to change in chapter 3, well, at least one of the big things is we're not just going to say increase cash and increase capital. We're still going to do it, but we won't say it. What we'll say in chapter 3 is we're going to say we're going to debit cash and credit capital. That's what's going to be happening. We're still doing the same idea. We're still identifying the same accounts, and that's not changing, except we're going to learn in a moment what are the increase and decrease rules for all these different accounts. All right, I'm going to give you that. I'm going to give you that summary before we take the break in a minute. Okay. All right, so let me do this. Let me change my screen.
We're moving into chapter 3.
Yep. I I need to transition. Can everybody see that?
Yes.
Yes.
It should say Chapter 3, Analyze Business Transaction Using T Accounts. All right. So, like I just said, let me just kind of move down. And I'm not going to do, we're not going to go through every slide, by the way, but because I've already recorded all of this for you in Blackboard. You can go and play it, all my recordings, later this week if you want to. But again, here's the equation. Assets equals liabilities plus equity. This is just the basic equation. And of course, we know that if you go back to the basic definition, your assets is what you own. Your liabilities is your debt. That's what you owe. And then the owner's equity, they defined as basically what's left over. That's going to be your ownership, your net worth. Okay. And so where we're headed tonight then, and what I'm going to show you here, I'm going to show you the slides on the PowerPoint, but then I'm going to bring up a whiteboard and I'm going to give you some note taking in a minute. But we all know that you have to be able to classify the accounts. We've been doing that already in the problems we've been working. We have to know if the account's going to be asset, liability, or equity. We just did that. The layer we're going to add on is right here. And this is called T accounts. Notice you've got your equation, and then it looks like you've got a giant T. You should notice that there's a left side and a right side to every single account. What they're showing you here, and I would say don't write this down just yet, but what they're showing you here is that assets increase on the left side and they decrease on the right side. Liabilities are just the opposite. They decrease on the left and increase on the right, just like equity. Notice they're just the opposite of your assets. So they give that to you, and then eventually what they do, and I'm going to show you, there's one more slide, I'm just going to page down, is they'll give you this. So here what they do is they give you this same thing. They give you the T account, but then you'll notice they write debit and they write credit. And that's what I'm going to get into here in a minute. So debit is going to mean left and credit is going to mean right. That's the same for every single account. That's a universal rule. If you look at any account they ever give you, the debit side is always said to be on the left side and the credit side is always on the right. That should be easy to remember. Where people get this mixed up is knowing the increase or the decrease rule. And so in a couple minutes, let me do this. I want to show you right now. I'm going to bring up my whiteboard. This is how I would illustrate it. Move this up. All right. So this is what I would typically do in a class setting. So what I'm going to do is I'm going to get I like red. So let me get this on. All right. So what I would do is I'm going to go ahead and write out the equation. So I would say assets equals your liabilities plus your equity. I'm just kind of abbreviating, but I think y'all understand what I'm saying here. Then what I would do then is I'm going to draw a T account under each of these. So there's assets, there's your liabilities, and there's your equity. Then what I'm going to do is I'm going to go ahead and write the debit and credit. So I'm going to write debit and then credit. And I'm going to do that for all of these, debit and credit, debit and credit. So hopefully you can write that down too. Now, just on a side note, let me give you this. The abbreviations for debit is DR, and the abbreviation for credit is CR. Sometimes you'll see that in the book and you're doing some writings. You might see that in Connect. So DR is an abbreviation for debit, and CR is the abbreviation for credit. All right. So what I typically do is I'm going to write it out like this, and then now I'm going to give you the increase-decrease rule for everything. So here's how we do it. So for assets, I'm going to put plus on the debit and minus on the credit. Plus means increase, minus means decrease. When I go to liabilities, it's going to be just the opposite. I'm going to say minus on the debit, plus on the credit. For equity, same thing. Minus on the debit, plus on the credit. And generally, that's your rules. Assets increase with debits, decrease with credits. Liabilities, it's just the opposite. It's going to decrease with debits, increase with credit, and then equity works the same way. If you take a step back and look at this accounting equation, you'll notice assets are on the left side of the equation, right? They increase on the left side of the account. Liabilities and equity are on the right side of the equals. Guess what? They increase on the right side of the account. So that's fundamentally how they came up with it. So now, once you get this, here's what I add to this. So remember, when we talk about equity, remember I said there's 4 equity types of transactions, 4 of them. So let me give you the rules for those. You've got revenue. So I'm going to write out revenue, T account. I'm going to write out investments. That's another one. Again, this is back in chapter 2. I believe I gave this to you in chapter 2. Investments is another transaction. You've got expenses. On my T account. And then you have your withdrawals. And that takes care of all of your different types of equity transactions. So let me go back now. Let me give you the rules on these. All right, so for revenue, write this down. Put minus, plus. For investments, put minus, plus as well, okay? Again, minus means decrease, plus means increase. For expenses, do just the opposite. Put plus, minus, and for withdrawals, do plus, minus, okay? Again, plus means increase, minus means decrease. And then also write this down. For investments, in parentheses, put capital. That's going to be the name of the account we use for investments. And for withdrawals, go ahead and write the word drawing. There's an account name that's going to come up that you'll see. They like to use the account called drawing to account for the withdrawals. Okay? So when you look at this, everything probably makes sense except for expenses and withdrawals. Because everything on the right side of the equation, we said, oh, increase credit, decrease with debit. But when you look at expenses and when you look at withdrawals, they act just like the asset rules. And so what happens here is like this. Every time we increase an expense, we will say debit, but eventually, essentially what we're doing is we're increasing the debit part of equity, which is a decrease, okay? Every time we say debit drawing, it's the same thing. We're essentially debiting equity, but we don't say that. We say debit drawing. We'll say debit expenses. But it's kind of like saying we're affecting the decrease part of equity. With revenues and your capital investments, those are aligned with what we thought, because anytime you have revenue, you increase them, those are increasing the credit side of equity as well, okay? So it's kind of like, of the 4 equity transactions, so you've got 1, 2 of them increase with credits, and the other 2 increase with debits, but hopefully I'm just trying to explain this, they are essentially affecting the debit part of equity. Now, regarding everything else in this chapter, these are your debit and credit rules. So not only does the equation have to balance, when we go through some transactions later tonight, we will also say your debits have to equal your credits, okay? So every time we have a debit to any account, we have to have a credit to offset it. And hopefully you'll see later on, they'll try to show you that we'll have the debits equal to credits. And at the same time, your accounting equation will also be balanced. Okay? All right, now, one more thing, and then we'll take a break here in a minute. Eventually, later on tonight, we'll get to this idea of what they call, it's called a normal balance. We just worked that problem where we had the accounts receivable of what, 7,300 or something like that, and we collected $5,000 of it. Well, eventually tonight, if we did something like that, the question would become, well, what's the balance of accounts receivable? Or what's the balance of cash? And the rule I want you to give you right now is the balance, as we're looking at this from a T account perspective, the balance of any account is always going to be the increased side. Just kind of get that down for now. I'll show you how to calculate a balance later tonight. But just the term normal balance means increased side. So why that's important is if you look at this diagram I just drew, wherever you see a plus on any of these account titles, that is said to be the normal balance side. Wherever you see a plus, that means increase. In the accounting world, that means normal balance. So what that means for you tonight and next week is that once we start to look at our asset accounts, right, classifying our asset accounts, we just simply follow the rule. So every time we increase an asset, we'll be saying debit. Every time we decrease an asset, we will be saying credit, okay? So I don't want you to overthink this, because later on after our break, we'll talk about the cash aspect, because this is, I'm not gonna get into that right now, but because I'm gonna give you a little break, but it's like, that confuses people because it seems to be a little bit different from what you're used to maybe with your bank account in terms of how you think cash is increasing or decreasing. But just for now, we're gonna be classifying accounts into these categories, and we'll be saying debit or credit, meaning increase or decrease. Debits have to equal the credits, and then eventually we're going to do a normal balance. The normal balance should always be on the side that says plus, okay? All right, now I wanted to give you these rules because these are all the rules for debit and credit. These will apply after chapter 3 on every single chapter for the rest of the semester, all right? So if you wrote this down, that's great. You know, after tonight's class, you can go back and watch this part of the video and write it, take some notes again, rewrite your notes, get this down. These are the rules you need to know, okay? All right, guys, it's 8:11. I'm gonna give you a break. Let's do 10 minutes, 10, 13 minutes. Let's say start back at 8:25 on your clock. So I'll give you a pause, take a restroom break, go get something to drink, take a quick break. So I'll give you 13 minutes. So at 8:25, we'll come back to this. There's a couple more things I'll show you in the PowerPoint, and then I'd like to illustrate a couple problems with you as well, okay? All right, so I'll go ahead and pause my video and exit out for a quick minute, and then I'll come back and be with everybody at about 8:25. You guys can do the same, take a quick break.
Tự nhiên nghe nhỏ.
Mẹ mà đi gym là buồn ngủ lắm rồi. Với tô cơm mà bạn mình ăn cứ mỗi lần nó chắc mắt là cái con mắt nó lại mở ra nhỏ hơn. Đây lên nhiều 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 đây là nhiều nhiều á nhiều chứ không phải nhiều đâu. Gì vậy? Để cho gì? Chịu rồi.
All right, guys, I'm back. It's 8:25. Hope everybody's with me. Again, I left up the my whiteboard, so if you had a chance, you want to go back and rewrite your notes, you can just take a look at it. But yeah, I've given you all of the debit and credit rules right now. This is everything. So the hope for the rest of tonight, for the next hour, is to, I'm going to look, there's a couple things in the PowerPoint I want to show you. I'm going to walk you through some transactions, and then I want to get you into at least one application tonight on the book and show you how do you go through this and actually do the debit and credit. And then literally this weekend, next week, that's what we're practicing. Okay, so let me change my screen. All right, so I should be back to the PowerPoint. And notice I'm starting off with, since I just gave you all the rules, I'd like to walk you through some of these PowerPoint illustrations. They give you some really good examples. And again, I want to try to emphasize the debit and credit aspect to that as well as we go through this. Okay, so if you're not with me, if there's something else you want me to talk about real quick, just let me know. Otherwise, I'm going to get this going.
Oop, I have something.
Yes, go ahead.
So Daniel mentioned having I think it was Daniel, had a problem earlier with the homework where it would give you all the like check mark bubble things, but it would still be missing information.
Okay.
So I started the homework during our break and I was looking at it, and on one of the problems I had trouble with it because I think my equity side was empty, but I couldn't find, because they have like certain selectable titles that you can put in your spreadsheet. And
okay.
so I found that filling in something over there, which might have just been something I was missing reading it, it gave me a green bubble even though I got like the total wrong or what have you.
Okay.
So it doesn't tell you when you're missing titles. So it'll give you all these green check marks, but it wants you to fill out more into it, if that makes any sense.
What problem were you looking at? Do you remember?
I think it was number 3. One sec. Let me get out of full screen and go back. Yeah. So it was number 3 for me.
Hold on, let me take a look. In fact, let me do something real quick. This is for chapter 3 homework?
For chapter 2 homework, question 3.
Hold on. Chapter 2 homework, problem number 3?
Yes.
And I'm just going to bring this problem up right now. Okay. So everybody, if anybody's watching, if you haven't submitted problem number 3, let me go ahead and share my screen. What you're getting ready to see is the actual correct answers to the problem. Not that you should just copy this down, but so Tori, I guess based on your preview, so they want you to kind of click a drop down arrow for each of these accounts. And then it looks like, of course, you got the equity, but is that where it's coming in, where they're saying you needed to fill out more, you didn't have the right box?
So the one thing I didn't have filled out yet was the capital under equity.
Okay, right here.
So I think I'm a little confused on where, so I put in the capital and it said the capital was right, but my total was wrong. Can you show us real quick where that capital amount comes from?
It should just be a plug number. I mean, okay, so for example, if I went through this problem right now real quick, so it says the following financial data, this is for the dental practice, began operations in July. And they say that you owe $42,000. In fact, we got 2 of these. So if you owe $42,000 and you owe $12,360, if you add number 1 and number 4, that would give you your total liabilities, which is $54,360. Okay. And then it says you have a cash balance of $31,000. So there's where they got that. Has dental supplies of $11,300. That's where they just plug that in. Dental equipment's $57,100. They're just plugging that in. And then office furniture of $20,000. So once you do that, you add up your assets. In this case, you got $119,400. And then you add up your liabilities. You got $54,360. And then let me illustrate this. So then what you do is, and all I'm doing here, I'm gonna annotate this. So what you do is you take the 119,400 and you subtract out 54,360, and that's how you get that number.
Okay, I gotcha. I didn't realize they wanted to us to solve it as well with it, so I got a little confused.
No, that's a good question.
That makes
No.
sense. Okay.
Yeah, this whole problem, if you go back to your fundamental equation, assets equals liabilities plus equity, all they're doing is they're saying assets minus your liabilities also equals your equity. They're just rewriting the equation.
All right, that makes sense now.
All right, so no, I'm glad you asked. So if anybody else, if you haven't done it yet, you know, I basically am, you know, all just have to keep doing it, but that's all they're wanting you to do. They're just having you plug these numbers into the equation, and then we often say the one thing they didn't give you was this, and that's just what they call a plug number. You just have to subtract your assets, or subtract your liabilities from your assets to get this number. Okay.
All right, that makes sense. And then, so my problem with that, like going back to what I think Daniel said about the green bubbles, is that when I had my equity blank at the time, it didn't tell me anything was missing from that section. So it made it look like all my answers were correct.
But if you tried to submit, you wouldn't get the full amount of points, right?
It would just let me retry the problem.
Right, and that's.
But yeah.
Yeah, it's not perfect.
I had a problem.
Yeah,
I'm
that's
sorry.
a good point. Go ahead. Yeah, go ahead.
Okay, so I had a problem with number 5. Can you go to it on the homework? So I knew the net income was an increase. The increase was the net income. They kept saying my number was wrong. I kept getting, I don't know what I was getting. Let me see.
So in this one, hold on, let me get my, oh, hold on. It's got my, let me go back. I screwed something up. Number 5, right? So on this one, you have to remember, they're just asking you essentially like, what's your income statement? So you've got, and I'm just, give me a minute, I'm just moving my stylus.
I was trying to, okay, what I was trying to do, I was trying to subtract the 93,000 from all the expenses except for the repair. Then I was getting my answer, but the answer kept being wrong. So I didn't know if
you've got 2 revenues. You've got fees for computer repairs of 93,600, and you've got 13,460. These 2 right here are your revenues. You got to add these together. And then your expenses are, you've got advertising, I'm just going to put a minus 16,200. You've got salaries of 41,000, you subtract that. You've got telephone of 2160, subtract that. And then utilities of 3420, you would subtract that. So you got 2 increases and 4 decreases. If you just net these, you should come up with a positive 44,280, which means that your revenue, it means your revenues are more than your expenses.
Yeah, number 5 took me a hot minute.
yeah, because I was getting confused.
Because the fees part made me believe that it was me paying someone else for something. So I thought it was all essentially expenses. But then once I figured it out, all the expenses actually said expense, and the ones that didn't, I saw those as a net eventually, but it took me a while.
I'm not trying to be sarcastic, but would it make more sense if they just said revenue?
Yes,
revenue?
the language is so ambiguous.
Yes, like
And
that's what I kept asking you. Like, what is the
I said it last time. It was all
interpretation for
it's all
each
like
one?
word problems, but it's the main thing is just figuring out what words indicate where it goes.
Right.
And so since all it said was fees, I didn't have a clarification of whether it was a fee for me or I was having them pay me for a fee.
All right. Let me ask you, does it make sense now?
Yes.
Yeah.
All right. So that's, I try not to pick any, of course, remember this is homework. I hopefully don't pick any weird problems when you get to the exams, but you know, here's how I tend to run this stuff, you know. I mean, that's why you guys ask me questions, and that's very good. I mean, you practice it. If you get stuck on something, just let me know, and I'll be glad to bring it up and go over it with you. In addition, you'll find out later on, you know, if something comes up and let's say it's a test question or a quiz question and everybody's missing it and just a really weird way they've asked it and I picked a bad question, then quite honestly, what I tend to do, I've done in the past, is I'll just throw it out. And but yeah, but the other part too is, you know, it's just the aspect of as you practice more and more, you'll get used to how they word this stuff. I know this one's kind of a weird one. I wish they'd just use revenue. I often said why they don't use revenue, but you know, I'm kind of handicapped in terms of the different problems I can pick because they all say the same thing in here. But I'm glad you brought that up. But if this helps clarify it and then now you got it, then that's great. But I think going forward, you're going to find that after, I think it's starting in chapter 3, I think it's chapters 3 through chapter 6, the revenue account they use, they call it the same thing every time. It's called fees income. And once you get that down, you've got it. Okay, that's the only revenue account you're going to have to worry about, I think, from chapters 3 through chapter 6. And then everything else, like you guys just said, it'll say expense on it. So that's pretty easy to identify. Okay. All right. I hope that helps you guys out on that one. All right. So let me get back. All right. All right. So I'm back on my PowerPoint. And again, I like these PowerPoints for the fact that they actually have problems and illustrations on this. Not just like you're reading a typical history PowerPoint where you're just reading the words. Every slide on there has a transaction on there. So what I want to show you now is just some examples of how to use.
I'm trying to get my edges to go back.
I'm sorry, do what? What was that? Did I miss something? Denisha, did I, are we okay?
Nah, we good.
I think her mic was just on.
Oh, that's fine. That's, like I said, I mean, you know, I've only been doing LVL since March, or is it April, when is it? And I didn't do any live virtual over the summer. And I just got a new computer because my other computer was crashing, so I had to go out and get a new computer. But, you know, even for best practices, I think, you know, we're all learning a little bit. You know, this is different than a in-person class, even though it's live. The thing, just kind of off the record, the thing that drives me nuts about live virtual lecture is that, you know, if I don't see your video on, I can't see your facial expression. I can't see if you're getting it or not. Whether if we're in a class session and we're all together, it's much easier for me to observe and figure out just the kind of the vibe of the class to see where everybody's at. And so that's kind of one of the negative things I don't like about live virtual lecture. This is my opinion. I like the fact that all my stuff does get recorded and you can go back and play it later. I think that's a good resource, but it's not perfect. But so, all right. So what I'd like to do now is to go through some transactions using the T accounts. I want to show you how that works. And then I want to get into what they call the balance. I want to show you the trial balance. That's another concept you got to get down in this chapter. And then show you the financial
You're getting really quiet and we can't hear you. You're getting really quiet.
Is it going down again?
It's not getting crackly. You're just like, we can't hear you. Like the volume's getting really low. Unless it's just me.
Nope,
Is
it's
that
just
everybody
not you.
too?
No, it's fluctuating up and down.
Okay. It might just be a bad night on internet connection. So I'll do my best. And then hopefully next week I'll try to have a fix for this. But last couple weeks it wasn't like this, right? It's better.
Yes.
My morning class didn't comment on it, so I didn't get any negative feedback this morning in terms of not being able to understand me or hear me. So I don't know, maybe it's just the time of the day today. I don't, you know, internet stuff happens all the time. I don't know. But after I record this, I'll go back and play it over and look at it and see if I can, you know, figure out a different way. But yeah, I'm looking at my controls right now. I don't see anything where it says that it's not a good control. I'm looking at, let me look at my audio. Again, I'm not getting, sometimes I think the last couple of weeks, I actually would get a message that would say bad connection or something. I'm not getting that tonight, but yet you guys are saying I'm kind of static. I apologize. So just kind of bear with me, and if you need me to repeat something or say it slowly, more slowly, just chime in and I'll go back and do it again. Okay, so I'm on this. This is our first transaction, and I want you to see this. Notice it says this is where the owner is investing in the business, and you'll notice that they're putting $100,000 into the business. Notice you've got cash and you've got capital. Notice that you've got cash on the debit side and capital on the credit side. And where's my stylus? I keep on losing it. Oh, there it is. So what that means then, and I'm going to annotate this because I don't know why it's not on this particular slide. Let me change this. Is that, get this over. All right. Remember, that means debit on the left, credit on the right. Debit on the left, credit on the right. So notice that cash increased. Cash is an asset. You increase cash with the debit. So let me talk about that for a minute, because a lot of people get confused with that one because you're so used to probably thinking if you go to the bank and deposit money, or you get your paycheck deposited into your bank account, you might be used to hearing something, oh, your account has been credited. In fact, if you look online, if you do online banking, which most people do these days, if you look at your accounts, lots of times they'll say your account has credits and debits, where a credit would increase your cash account is going up. So why is that different? Well, just long story short, just I would say erase what you think you know about an increase to cash in the banking world. From the accounting perspective, is that cash is an asset. Assets increase with debits. So anytime cash increases in a business, it will always be debited. And anytime cash decreases in a business, it will be credited. That's just how it works. That's the rule. And then also notice, again, I'll write this off to the side here. Remember that your debits have to always equal your credit. So I often tell you, when you're first learning these debit and credit rules, if you can get at least one of the accounts correct, then you can, by definition, you can back into the other account. So as long as you can get this down now, if you can get cash correct, and it should be debited, then by definition, you have to credit something else, which in this case, if you know the account name, it has to be capital, okay? So sometimes, just to kind of like as you practice these and you get better with this, try focusing on just the cash account to start with, because just about every transaction you're going to see has cash in it. And if you can get the right debit and credit down with cash, that should help you get the other account correct, okay? That's just kind of like a little trick as you're learning this, all right? Okay, let's go to the next one. Next one says, and you've seen this before, it says Eli's Consulting Services issued a check to purchase a computer and other equipment. So they're going to use the equipment account. And we all know at this point that a check is the same thing as cash. So notice you've got equipment and cash. They drew up the T account. And again, as I'm talking here, notice they're not writing out the accounting equation every time. At this point, yeah, if you wanted to, you could, but just remember that all this is still in the equation, but we're just analyzing individual transactions here with specific accounts. And we're just using T accounts at this point. So cash is credited because it's being decreased. It's an asset. Equipment, which is another asset, is being increased. So you're debiting equipment and crediting cash. So debit, credit, right? Debit's on the left, credit's on the right. Okay. And
But I'm not understanding why though. Like,
okay, Tanisha, a question?
yeah, I'm not understanding why.
Why? Okay. So what part?
I don't know. I'm confused already. I can't understand.
Let me go back. So remember, let me write this out. You've got your assets. Here is the rule of debit and credit. Assets, debit, credit. Assets increase on the debit. They decrease on the credit. Okay? Both equipment and cash are both asset classifications, right? If this was the accounting equation, you'd say increase equipment, decrease cash. That's what you would say. Under the debit and credit rule, we're just going to plug in debit or credit. So we'll say which account increased equipment. So you'd say debit the equipment account, and which account decreased, which is cash, you'll say credit cash.
And so this is pertaining to chapter 2, right? Like, how is this tying into?
No, this is chapter 3.
Like, I know this is chapter 3, but I'm saying, like, as far as chapter 2, like,
okay,
how is it intermingling with each other?
Well, if you go back, let me write out your equation. If this was just chapter, okay, if this was chapter 2, what you would say is, you'd say plus 5,000 equipment and minus 5,000 cash. That's what you would say in chapter 2, okay? And we're still doing that. It's just that now we're looking at it from the T account perspective, okay? So now we're not just saying increase asset, decrease asset. We're specifically applying the rules of debit and credit. So we're saying increase the asset by debiting equipment and decrease cash by crediting it. That's all we're doing. And every time we're not writing out the equation every time we do a transaction, even though I'm just telling you at the end, if you wanted to kind of like look at a summary, you would see that. It's just that right now we're just applying these rules of debits and credits. So essentially what we're doing is we're building upon what we just did in chapter 2. We know the equation works. Now we're just going to add the rules of debits and credits. That's what we're doing. So the way you tend to do it is we're just going to take each transaction one at a time. Okay, this is just one transaction. You've got to identify which account. Okay, you have to classify it. Is it an asset, a liability, or something else? And then once you've identified it as one of those classifications, increase, decrease, you then just follow the rule. All right. If it's an asset and it's increasing, say debit. If it's an asset and it's decreasing, you'll say credit. And that's what I'm practicing with you right now, because that's the rules that we just gave you. Okay. And
but you should already know that, because on chapter 2, like when they have the parentheses around it. So say if it's parentheses around cash,
okay,
it would be a decrease of credit.
It'd be decreasing. That's correct.
Okay.
And then it also means credit. It means the same thing.
Okay.
So all we're doing is we're just adding on that extra layer now. We're not just saying increase or decrease. Now we're saying debit, credit. But you're right, it means the same thing. Okay? Is that clear? It's a good question.
I'm always backwards with stuff. Like I'll do it, but I can never comprehend like how I'm doing it.
Well, trial and error. You just got to keep practicing it, okay? And that's what I'm trying to do right now. Just you have to keep practicing it, and anytime you get it wrong, think about why you're getting it wrong. If you get it wrong, and even if you get it right, think about why it's right. But I just try to go back and say, just remember, you first have to make sure you have to classify it in one of those categories. Is it an asset? Is it a liability? Or is it an equity item? You then got to figure out, is it increasing or decreasing? Okay. And that's what we did in chapter 2. And then now we're doing that same thing, but now we're adding debit or credit to it. That's all we're doing. Okay. And then last thing is, each one of these, we're not writing out the equation every time we look at a transaction. We're looking at individual T accounts now. That's the one difference. And then remember that every time we debit in any account, you have to have a credit to another account to offset it. Okay?
So pretty much knowing where it belongs, what like an assets or liabilities, pretty much knowing where it belongs on that platform, then you can decide if it's a debit or credit. So if you put it in the right spot, like if it's an asset, if you put it in the asset category, now you have to decide on, are you taking away from it or adding to it?
Correct. Very
Okay.
good.
Okay.
Yep. So let's go to the next one. And so what we're looking at here is we're just doing these one at a time. These are just individual transactions. Take a look at this one. So look at this. So we've got bought office equipment on account, 6,000.
Okay.
So when you sit back and say, okay, I've got to analyze this, I need to know what accounts would be affected. You'd say, well, equipment, that's what they're going to use.
Okay.
Accounts payable.
Right.
That's what we would have done in chapter 2.
Right.
We would have then said equipment will increase or decrease, and you guys would say increase.
Right.
Then I'd say, okay, what about accounts payable? You'd say, oh, accounts payable also will increase.
Okay.
So now tonight we're saying the same thing, but now we're adding the debit credit. So equipment, which is an asset, and it's increasing, has to be debited.
See, I would have thought accounts payable would have decreased because the word payable sounds like you subtracted my money.
No, actually, accounts
Well,
payable.
Tanisha, it will when you pay it, but we haven't paid it yet.
Exactly. Exactly.
Eventually our money will go down. But for right now, when you borrow money, you're increasing debt, right?
Right. Okay.
We didn't borrow money. It's kind of like that, but we bought equipment, but we're going to pay later. So we're increasing our liability, and to increase a liability has to be credited.
So basically, you bought some equipment on credit.
Correct.
Why can't y'all just say it as simple as that, like on account and all that stuff? That's what's
Tanisha, they
throwing
will.
me off.
No, they will. They'll do, well, here's the thing. They'll do it both ways. Sometimes they'll say on credit. Sometimes they'll say on account. But at least I'm telling you up front so you practice it. All right? Because that's how they're going to do it. Every book, it doesn't matter. You take applied accounting, you take financial accounting, you take intermediate accounting, any accounting class you take, that's just how they write it. Okay? And that's why they call it just a language. You just have to get used to it. It's strange. It's not grammatically correct in many cases. In fact, a lot of these sentence structures, if you take it to like an English professor, they would mark it all up saying this is wrong. It's got dangling participles. It ends with preposition. But that's just how they write in the business world. That's just how they write it. Okay. So,
Okay.
but hopefully, as we go through these, you'll kind of also figure, the goal is in this chapter is to figure out the debit and credit rules. And if you look at this analysis, notice it says the asset account equipment is increased by 6,000. Well, it's an asset. How do you increase an asset with the debit? It says the liability account, accounts payable, is also increased by 6,000. That's a liability account, and the debit and credit rule says you increase that with the credit. Okay. And
So
that's
cash credit equipment increases by 6,000. Liability, okay, instead of saying liability, I don't know. What's the other word for liability?
well, if they say
Account.
bought it on account or bought it on credit, that's typically the two different ways they'll word it. And that's going to be accounts payable. Okay.
Okay.
If they had said we paid our creditors, okay, if they had said you paid your creditors, then you would be debiting accounts payable. You'd be reducing it. Okay, and you'd be crediting cash. And we'll get some of those too, okay? But on this individual transaction, you have an asset account and a liability account. Both of them are increasing. If you can get the one side down, if you can get down that you have to be debiting increasing equipment, the debit and credit rules say you have to credit something to offset this debit, because remember, your debits, let me write this again, just remember your debits always have to equal your credits. So if that's a debit, you have to have a credit to offset that. Okay? Just keep it simple. Don't overthink it. Okay?
Yeah, I think that's what I'm doing.
Let's look at some more. And again, that's the goal is the rest of tonight and next week is to practice doing this. All right. Let's look at the next one. Purchase supplies for cash. So, and by the way, when they say issued a check, we all know that's cash, right? Check is cash, is money. So we issued a check, $1,500 to buy some office supplies. Notice the analysis. The asset account supplies, that's an asset account, is increased. We know now, hopefully, that assets increase with debits or credits. What would you guys say? Anybody? Assets increase with what?
Credit.
Debit.
Debit. Assets increase with debit. That's why they debited supplies. Cash is decreasing. It's also an asset account. Notice it's being credited because it's being reduced.
Right, because
Okay.
you're paying for the supplies.
Correct. So cash decreases with the credit. Supplies increases with the debit. These are two asset accounts, right? One asset increases, the other asset decreases. Debit equals your credit. Okay?
Isn't the answer in the analysis? Am I foreseeing it?
Yeah, that is the answer. But what they didn't give you, and what I'm telling you is they didn't say debit or credit. Notice they just put 1,500 on the left side and 1,500 on the right side. And so what I'm adding here is I'm also saying, remember, that means debit. The left side means debit, and the right side means credit. That's universal, okay? I know it's a little strange. And by the way, the math, it's not math. It's easy mathematics here. This is not difficult math for anybody. It's just the rules. Everybody, you gotta get the right rules down.
Right.
Okay, guys, so here's the next one. Look, you're paying a liability now. Head of the slide says payment of liability. So it says issued a check in the amount of $2,500 to Office Plus. So it says the asset account cash is being decreased. There's cash.
Right, because you're paying it.
And then we got the liability account accounts payables being decreased. Notice we credit cash because that's how you reduce an asset. And you debit accounts payable, that's how you reduce the liability.
Okay.
Debit accounts payable, credit cash.
So cash is going to decrease and accounts is going to increase.
No. In this case,
Why do I keep getting it backwards?
it just takes some practice. They're both decreasing. Accounts payable is decreasing by a debit, and cash is decreasing by a credit. What you need to do is think about this. You know that the whiteboard that I just illustrated with the rules? What I would suggest you do is go back, you know, that the T accounts that I drew out earlier tonight.
Yeah, I wrote them down.
Okay, go back and look at what I wrote. For liabilities, how do you decrease a liability? Does it say debit or credit? Yeah, Tanisha, do you see it? It's the
liabilities. Debit is minus.
That means decrease.
Credit is increase.
Correct. And assets, just the opposite, right? Assets are debit increase, credit decrease. And so all we're doing here is we're just plugging these numbers in and then following those rules. Okay?
But I ain't write down cash. I got, is that the same as equity?
No, cash is an asset.
But I don't got cash written down. I got revenue, investments, expenses, and withdrawals. I don't have cash.
Well, cash, again, cash is under the asset category. So Tanisha, I think at least part of the problem is you need to go back and review what are the different asset categories, all right? Because assets are cash, accounts receivable, equipment, supplies. I just didn't list all the assets. I just general name asset. That's all your assets. So what you might want to do is go back and review all the different categories that would be an asset. Cash is going to be probably the most common asset. Okay, accounts payable will always be the most common liability. The revenues, the expenses, the investments, and the withdrawals, those are specific types of transactions. This transaction right here, all they're doing here is you're just paying your bill, you're paying your debt. You're paying your liability. So to pay your liability, you reduce your liability by a debit, and you reduce your asset by a credit.
Okay. Hold on.
All right, next one. I think this is the last one on just the prepayments. This one, you notice you've got two assets affected. They issued a check. They paid rent in advance. Rent in advance is called prepaid rent. Okay, that's an asset. We know two assets are involved here, right, under your rules. You're increasing one asset, decreasing another. Notice you've got debit one account, credit another account. That's all you're doing. Debit means increase to prepaid rent. Credit means decrease to cash. And your debits equal your credits. Okay? All right, now, again, we'll practice these, but then the next thing I want to show you is once you do all this, you might be asked to then calculate the balance of an account. So let me show you this slide. We've got up here, they've got cash, and you'll notice on the debit side, you've got $100,000. On the credit side, you've got $5,000, $1,500, $2,500, $8,000. So what they're doing here, let me write this out, is, again, here's our debit, here's our credits. We've got 100,000 of debits, and if you add up all your credits, you've got 17,000. So when they say, and I gave this to you earlier tonight, the normal balance of an account is always the increase side. Well, cash goes under the classification of an asset. And we know that assets increase on the debit side. So to get the balance, you take the 100,000, they're doing it right here, you subtract out the 17,000, and you would show that you have a debit balance of 83,000. That's going to mean something later on. So cash, which is an asset, if they ever say calculate the balance of your T account, you have to add up your debits, add up your credits, and then subtract. Whichever side has the larger number, that's where the balance should be. And for cash, that's on the debit side because it's an asset. That's how it's going to work. And that'll work for any asset. Anytime you come up with an asset, your debits should always be more than your credits because they always increase on the debit side. So having said that, let me show you something. On the next slide, that's what they show you. They show you all these different T accounts. Notice you've got cash, accounts payable, capital. Notice here's your cash number. Notice the balance says 83,000 by taking that 100, subtracting out 17. Notice for equipment, you had two debits. That's what, 5 plus 6 would give you 11,000. Notice again, that's on the debit side. So what they tried to do here is they took all these T accounts, they came up with the balance, and then they plugged it into the accounting equation. So just like your debits have to equal your credits, your accounting equation still has to be in balance. So notice your total assets would be 1,035, and that's just taking each one of these individual balances. They added them up. Your total liabilities, notice it's a credit balance of 3,500 right there, plus your equity. Notice those two added together, you're still in balance. So again, like I told you earlier, we're just adding a layer onto the accounting equation. Okay. Now, a couple more transactions I want to work with you on. So let's look at some revenue. Again, notice this. So we've got recorded $36,000 of revenue from services sold or performed on cash. Notice the two accounts affected, cash, and then I think I told you earlier tonight, whenever you see this account called fees income, and write this one down. Guys, fees income, that's going to be the revenue account. So in chapter 3 homework or chapter 4 homework or chapter 5 or 6, They are pretty consistent. Anytime you have a revenue account, they like to use the fees income as the name. So I think a few of you tonight told me when you were working the chapter 2 homework that it was very confusing because you weren't quite sure what the revenue account was. Well, after chapter 2, chapter 3, hopefully we're kind of taking care of that problem. It just whenever you see fees income, that's going to be the revenue account. So look at what they did here in this problem. They took cash, which is an asset, and they increased it by debiting it. There's a debit to the cash. That's the left side. So therefore, for revenue, fees income, they had to credit it. So here's your debit on the left, and then there's your credit on the right. The debits equals the credits. Increase cash with the debit, increase your fees income with the credit. That's all you do. Okay? And that should be consistent on all your problems when you in chapter 3. Now, let's do the same thing, and I think we had the same issue earlier with on credit. So here's the same issue. It says you've had consulting services earned from various charge account clients. This is credit revenue. So notice we've got accounts receivable, which is an asset account, and then fees income, which is your revenue account. They're both increasing. So you debit accounts receivable, increase, and you credit fees income, which also is increased. Okay, so this accounts receivable, again, is an asset. Eventually, you want this to become cash, and in the next slide, we'll show you how that works. But for right now, you're just going to say debit accounts receivable and credit fees income. All right. Now, on the next slide, this is what they do. Notice now it says receipt of payments. The charge clients paid us. They paid us $6,000, reducing the amount owed to us. So they're saying that our accounts receivable, money that's owed to us, let's pretend, take the perspective that we're Eli, we're getting paid now. So we've got cash and accounts receivable. We're increasing cash and decreasing accounts receivable. So the debit cash is an increase and credit accounts receivable, which is a decrease. We're simply debiting and crediting asset accounts. There's your wash. You're increasing and decreasing an asset. You're debiting one asset and crediting the other asset. That's how it works. Okay. And I don't know what I said. Are there questions on that, what I just showed you? All right. Now a couple more, and then I do want to get into the book here in a minute. But so we've got the revenue, and then of course you also have expenses. Here's how the expenses work. So on this one, it says you paid the salaries, $8,000. So we know cash, which is an asset. And then they'll just say salaries expense. So I'll start with cash. So think of cash is decreasing, so you have to credit it. And then the offset has to go to a debit to something. And so we're going to be debiting the salaries expense. That also, by the way, means increase. You're increasing your expenses. That's a debit. You're decreasing your asset, which is a credit. So you're balanced. And that's how it works with all of your expenses. Same thing with utilities. It's the exact same thing on utilities, except all they do is they just change the name of the account. It's just utilities expense as opposed to salaries expense, but it's still an expense account. Notice they're debiting the expense and they're crediting the cash. Credit the asset. Assets going down, you have to credit it. Expense is increased, you have to debit. All right, one more and then I'll show you the trial balance. So the other one you'll see, and you've seen this already, is owner withdrawal. So notice the owner took money out of the business. It's a personal check. See that account where it says Trade and Eli drawing? Just focus on the word drawing. That's going to be the withdrawal account. Cash is, we've been using that. So we're going to take money out of the business, reduce cash, which is a credit. And then we don't debit an expense, but you debit the drawing. The drawing works just like the expense. You have to debit it to increase it. Okay? And that's basically it. And then as we keep practicing this, again, here's your, I've already talked about the double entry system. You always have to have a debit to offset the credit. We've already done that. I've already given you that. Eventually, here's where we're headed. Is you might get a problem, and I think you have to do one of these in your homework eventually, is they'll say prepare what they call a trial balance. It's not a financial statement. All the trial balance does is you just add up your debits, add up your credits to make sure that they're equal. That's all you do. It's kind of like the accounting equation where you add up your columns to make sure that your assets equal your liabilities plus equity. This is doing that from the debit and credit perspective. You should always be in balance. And notice, for example, let me write this one. All of your asset accounts, which are right here, you got cash, all the way down to accounts, or down to equipment. Those are all of your asset accounts. Notice all these balances are given on the debit side. That's normal. That's where they should be. Notice your liabilities, that's accounts payable. Notice that balance is on the credit side. That means that's a normal balance. They're just, all they're doing is they're going to the individual T accounts, and if it's a debit balance, enter it as a debit. If it's a credit balance, enter it as a credit. And they add up the debits, they add up the credits to make sure that you're equal. So you'll come across this when you do some of your practice homework problems. And I'm just showing you right here, that's what they mean by that. Let me get somebody had a question. Oh, I'm sorry. Yeah, let me go ahead and mute. Yeah, so some of the mutes are on, so I'm just muting everybody right now so it's not so distracting. So, all right. I apologize, whoever had typed in, I didn't see the chat come in, so I apologize for that one. So everybody's on mute right now, so hopefully you can hear me a little bit better. All right, so you got the trial balance, and then the last thing I'm going to say on this, and then I'm going to get to the book, is I don't want you to lose sight of the fact that we still have to do our financial statements. So remember, income statement is number one. In this case, they had net income. Your statement of equity is your second one. Notice income gets transferred to equity. And then notice your equity gets transferred to the balance sheet. So I know I did this last week with you, or 2 weeks ago, with showing you the order of your financial statements: income, equity, balance sheet. Just don't want you to lose sight of the fact that that's still our goal. Our goal is still to get to those financial statements. It's just that before we get there, we're adding in all these different rules in terms of the bookkeeping to show you how a business or an entity actually records all their transactions before they actually get to these financial statements. So there's a lot of stuff before you just get the net income. And as an accountant, as an auditor, as a consultant, whatever, or even a manager, if you're in a business, you may not be involved in all the debit and credit transactions, but you still need to have an understanding of it, because at some point in time, you might be asked to explain your net income or explain your capital. And if there's issues or there's problems, you have to maybe sometimes go in and find it. You have to go in and communicate and be able to talk with the accountants. And if you don't know the language, then you're not going to know what's going on. And so accountants kind of have their own language, just like computer science people have their own language. And so quite often, I find a lot of people that take some accounting classes, they just want to take the accounting. They might be an engineer by trade, could be electrical engineer, could be civil engineer, but because they work a lot with the accountants, they want to learn how the accountants think. How do you talk to an accountant? And that's why they'll go back and they'll take some of these classes, because they need to learn how to communicate. And so even though we say a lot of this stuff is automated, just because the computer can do it, the computer's not going to enter the numbers, the computer's not going to fix an error. You still have to have that judgment. You still have to understand the background. All right. Okay, so and I think in terms of this slide, I think that's the last thing I wanted to talk about. And I think Daniel, he had mentioned this earlier tonight. Let me just make one last comment and then I'm going to get into the book. Is they do bring up this concept of what they call a permanent account versus a temporary account. And I've always been a little baffled in terms of why, and this is, I think it's a pretty good textbook. They always introduce and mention this in chapter 3 when we don't even do it until chapter 6. Well, in chapter 6, we're going to explore this in much more detail. So my perspective on this is, I'll tell you what it is right now, but I will not test you on it or quiz you on it. You will not have this in any of your homework until we get into chapter 6. But what all they're telling us here is a permanent account is an account that basically rolls over from one period to the next. It's the balance sheet. Any account that's listed on the balance sheet is what they call a permanent account. A temporary account is simply, if you remember those equity transactions, I told you there's 4 equity types of issues. Your temporary accounts are your revenues and expenses and your drawing. Think of your temporary accounts as any account that's on the income statement. And let me go back. So what happens then is if I show you this, here's your financial statements again. Your temporary accounts, notice all your revenues and expenses. Notice how they, if you follow the red lines here, everything from the income statement ends up to the winds up on the balance sheet. So all of your revenues and expense accounts are said to be temporary because eventually we're going to do something where we're going to transfer all these balances into capital. That's why they call those temporary. We're going to take that drawing, if there's a withdrawal, we're going to take these accounts, we're going to transfer them into that capital account. And we're not going to actually do that until chapter 6. So I think, somebody asked, in case you come across this in your reading and you're confused about what it means, this is quite literally all we're going to do in chapter 6 is explore temporary and permanent accounts. But just for now, if you just want to remember them, just remember your temporary accounts is anything on the income statement, which is revenues and expenses, and your drawing or withdrawals. All your permanent accounts are essentially what's ever listed on the balance sheet. That's an easy way to remember it. All right. And then after that, I won't even touch it until we get to chapter 6, because we're not going to really do any closing entries. You'll see that later on until chapter 6. So in my opinion, there's no really need to worry about it. I feel like there's enough to worry about right now with just learning the debit and credit rules. Okay. All right. Now, let me bring this up. I'm going to go back and let me change something. I want to bring up a textbook problem. And I had it up earlier. It's probably gone. So let me go back. So I'm going to go into chapter 3. Give me just a minute. Okay. And let me check my screen and make sure I'm sharing the right screen. Boom, there we go. All right. If you can't see this, let me know. You should see where it says exercise 3.1, and then you should see I have an Excel template where it says you got the cash T account and the equipment T account. And so what I'd like to do is actually not 3.1, but I'd like to actually do 3.2. And like I said, I can go back and look at 3.1 if you need me to, but I want to show you right now from the beginning, this is how we're going to do our analysis in this chapter using debits and credits. Let me erase that. All right. So, and before I start, I just want to let you know, every one of these 5 transactions, we've essentially already done from chapter 2. You've seen these transactions before. Invest in the business, bought some equipment, performed services, paid for expense. We've done all these. This is not new. This is more repeat. What is going to be new is using these T accounts to do the analysis. So we're not plugging it into the equation every time. Now we're just jumping right to a T account analysis. So let's start with the first one. This is what I'm going to show you tonight. we've got Hayden invested $90,000 cash in the business. Again, I'll do some comparison and contrast here. If this was chapter 2, we'd go to our accounting equation. You'd say cash is an asset, it's increasing. We then say this is an investment, which is capital. You'd say increase capital, no problem. Now, in this chapter, we're going to go to the cash account, and everybody is going to say cash will do what? Debit or credit?
Debit.
I hear one debit. And we're going to say debit because it's increasing. Okay, let me increase that. That's easy to see. We would be debiting cash, and then the offset has to go to capital, which you would say, I'll just give you this one, you say credit capital.
Will we be writing this T-charts down?
Okay, so what you might want to do just on a piece of paper right now is write a T account and then draw cash. Just put, cash T account. Do it something, in fact, let me illustrate what I would do. And I'll come back to this slide. Let me go to a whiteboard real quick. So what I would do is something like this. And let me erase this. I would say, as you're kind of going through these, I would draw out the T account. I would write cash. I would write out capital just like that. And then you might even want to do this. You might even want to write debit and credit if that helps you to remember. You don't really have to do this, but tonight I'm doing this just to kind of practice, just so you know that debit means left and credit means right. And we'd be saying cash is debited for 90 and capital would be credited for 90. So here's your debits equal your credits. Notice again, if this was chapter 2, we would have said something like this. We would have said increase asset 90, increase equity 90. That's what we just did tonight. And we would have said, specifically that was capital. But this is how we apply the rules of debits and credits. That's the layer that we're adding on to this idea. Okay. So as I go through this, it's hopefully you just take a sheet of paper and then write out a T account every time you do these. Shouldn't take you too long. But if I go too fast, if I need to slow down, go back, just let me know. All right. So that was number 1.
And the equity was decrease. Did you have minus by that?
Credit. So it's right here. Mine's in my.
Oh yeah. Okay.
Mine's right here. So we're increasing. That's a credit. All right. Number 2.
Wait. So both of them increase?
Correct.
Okay.
Increase cash with the debit. Increase capital with the credit.
Just like in chapter 2. Okay.
Yep. Now, and you bring up a real good point. So you could be having different issues going on here, increasing 2 accounts or decreasing 2 accounts. But at the end, just remember, guys, this is for everybody. The debits always have to equal the credits. And what I've found that some students find useful when they first start this is if they just focus on one of the accounts, whether it's cash or something else, and they can get that rule down, by default, you have to get the other one. Because remember, debits equal credits. So in this problem, if you can just figure out that you have to be debiting cash, guys, you have to credit something else. You have to. And we know it's capital. So even early on, if you're not quite sure why that's being credited, you should still be at least get it right, because you know that the debits have to equal the credits. Or vice versa. If you're pretty sure you know capital should be credited, you've got to debit something else. And you have to back into cash. Cash has to be the only other thing happening here. So you have to be debiting cash. So I'm just trying to give you maybe a trick. And this is for anybody, just a trick on how to get the debits and credits right. I mean, you still need to understand. I think you still need to go back and understand it. And I don't want you just to try to memorize it, because there is some logic to this. But just early on, just as you practice, to think about, go back and analyze what you're debiting and what you're crediting. Okay. All right. Number 2 says paid $30,000 in cash for equipment. So paid $30,000 in cash for equipment. So I'll just start with cash. Should we debit cash or credit cash? Anybody?
Credit. Credit.
There you go. And by the way, that also means decrease, right? Let me increase that. So if I credit cash, I have to debit something else, right? So what's the only other logical option I have to debit would be what? They bought equipment, right? So I got to put a debit of 30 into equipment. So here's your debit to equipment and credit to cash. And if you're writing this out at home and you don't have this template up, which I don't expect you to because I just put it up, what you guys should be writing out is I would just draw another T account. Doesn't matter if you do it individually, draw cash, draw out equipment like that, and then put debit equipment 30, and then you can say credit cash 30. That's what you ought to be writing at home, something like that.
And that's not going to change your capital, right?
Nope, not right now. So take each one of these transactions individually, okay? And eventually we'll get to capital. In fact, was that Tori, whoever said, you bring up a real good point, actually. Let me just say something in general, and this is for everybody. Eventually, I know I talked about the 3 financial statements. You have income statement, equity statement, balance sheet. But let me just give you something to think about, because every chapter, this is where we're headed, guys. Everything ends up on the balance sheet, everything. Everything from the income statement, everything from the equity statement essentially gets transferred to the balance sheet. And generally the account that it gets transferred into is your equity. It's called the capital, all right? So when you said our capital doesn't change, it's a good point. It doesn't technically right now, but you'll see later on as we do more transactions, when we get to revenues and expenses and so forth, you will see that overall capital account become effective. Okay. All right, let me go back. That was what, number 3? No, that was number 2. So let's check out number 3. Number 3 says perform services for cash, 99,000. So perform services we know has to be revenue. And what's the revenue account we're using? Does anybody remember?
Fees income.
Fee income.
Fees income. And then it's cash, right? We got fees income and cash. Okay. So let's start with cash. Are we going to debit cash or credit cash?
Debit.
Debit.
Very good. You guys got it. You debit cash. And the reason you debit cash is because you're increasing it. It's an asset. So if I go to cash, I'll put 9,000 as a debit. And if you remember what I said earlier, that you have to have a credit to offset it. Well, if we debit cash, where would the credit go?
Fees income.
Fees income. There you go. There's your 9,000. And then if you're writing this out at home, again, I'm just going to do it both ways here. You would have cash. Here's your T account. You'd write out fees income. And we'd say debit cash 9,000, credit fees income 9,000, like that. That's what you got to be writing out, just like that. Okay. All right. Number 4. All right. We've got paid $3,800 in cash for advertising expense. So we got cash and advertising. So if I go to cash,
Credit.
Be crediting. It's an asset's decreasing, so you're going to be crediting. Very good. So I'll go to that cash account. And I'm going to credit it for $3,800. And I have to debit something else. What am I going to be debiting? What's my offset?
Advertising.
There you go. That's how you go. $3,800 debit, advertising. So again, you got cash. You've got advertising expense. You debit advertising for $3,800, credit cash $3,800. All right. So this credit, which means you're decreasing cash, this debit here means you are increasing your expenses. Okay. All right. One more. It says you paid $3,000 in cash for supplies. So paid $3,000 in cash for supplies. So we got cash and supplies, two assets. One asset increases, another asset decreases. So which asset should be increasing?
Supplies.
Supplies,
Should we debit or credit supplies?
debit,
There you go. You got it. So if I debit supplies, 3,000, and therefore I have to do what to cash?
credit,
There you go. If that's a debit, then you have to have a credit to offset that. And so you have to go back to my whiteboard one more time. So again, you've got supplies. Oh, your T account. You've got cash. Oh, your T account. You'll say debit supplies, and then credit cash. That's it. Again, I'm just doing these individually. And then if I go back to this real quick, since I got this pulled up. So that's all they wanted you to do in this problem was, set up T accounts and then go through these debit and credit analysis, which I've just done. I know I'm getting prints at 9:30. So I got a few more minutes with you. But if you can handle that, that's the start of chapter 3. We'll do a lot more. But this is where I'm telling you, you need to go back and, watch my videos again. But quite honestly, I would now start practicing. If you haven't done the chapter, get your chapter 2 stuff submitted. But you need to go into Connect and start practicing your chapter 3 homeworks. All right, you'll do all the stuff in chapter 3 as well. I intend to do more with you during our session again next week. But this is just to kind of start you off tonight, and I don't want to, again, throw too much more at you because I think this is a pretty basic problem just to kind of talk about it. But if this is all we're doing debits and credits. You'll draw out the T accounts, and you have to be able to recognize what account's increasing or decreasing. You have to put it into that classification of, is it an asset, liability, or equity? So those rules that I gave you earlier tonight, I'll write this out one more time. So where you got assets equals liabilities plus equity, and I gave you these T accounts, and I gave you all the increase decrease rules. I said plus, minus, minus, plus, minus, plus. Go back and review those. All we're doing here is, as long as you can classify into these categories, and then just follow the debit and credit rule, you'll be fine. And you can remember that the debits have to equal the credits. So if you can realize that you're pretty confident, an asset's increasing, and you have to be debiting that asset account, the other offset has to be credited to something. You have to be. It forces you to balance. There's no way you cannot balance. Okay? So if you can handle that, that's essentially what we're going to be practicing in chapter 3. Okay? All right. Does anybody have any comments or questions where I'm at right now? Anything I've shown you up to this point?
Not currently.
Do you guys feel like you have enough to at least get started practicing with chapter 3 after what we kind of talked about tonight?
Yes.
I mean, this is like, it's almost 2.5 hours. It's a pretty long recording, but everything I've just shown you right now, once we're done here in a few minutes, I will get this linked up to YouTube, and you'll be able to view this all week, really for the rest of the semester. Once it's in Blackboard, you can play this, you can fast forward it hopefully pretty easily, but at least you have what I've talked about tonight as recorded. But if you also go into Blackboard, and since I got a minute, so let me show you something. I'm going to change screens here in a second, because some people asked earlier, where's something, and let me just show you a couple things. Again, right now, I'm going to change my screen here in a minute. My computer's a little slow. Hold on just a second. Let's put it down. All right. My Blackboard is really slow tonight. I don't know if you guys are, if you're in Blackboard, if you're having the same issue, but hold on. So let me change my screen.
Got it. I got it.
All right. So when I keep talking about going in and playing my videos, guys, where I'm at right now is if you go back to Blackboard, you all need to pay attention to this link where it says Learning Modules. And of course, after tonight's class, where it says Zoom meeting recordings, this recording will be downloaded right here in Blackboard. But if you go to Learning Modules right now, which I'm going to click this link, since we're in Chapter 3, you go to Chapter 3 module, open up that folder, and you'll see that I've got, here's my video lecture.
Mhm.
You can play it, pretty much same stuff I just talked about, and it's about a half an hour. You've got some textbook illustrations where I'm illustrating exactly what I just did tonight. You also have the homework illustration. This homework illustration is the exact same problems you got to work for Chapter 3. I've already illustrated it for you. In fact, you could pause it and just copy the answers. I'm actually giving you the answers. That's not the point, because you still have to take the quiz and you still have to take the exams. But I put this here as a resource to help you guys learn this stuff. My hope is that you'll go into Connect and try to practice these problems. And then at some point in time, if you get stuck, your first stop will be go and watch my video, or go back to my videos, use these resources, use tonight's lectures video. And then as you practice, and I think Jay or somebody said earlier, this is time, but that's how you learn, right? You can't just get it overnight. But you've got these resources out there to help you learn the stuff. And then on top of that, you can still ask me every week we're in class. If you came across something and you're just not getting it, just let me know. I'll be glad to go back over it. In fact, I encourage every one of you before, today's the 20th, and I guess our next week's meeting is what, the 27th? Is that right?
It's the 14th today.
I'm sorry, today's the 14th, the 20th, right? Next week's session, or 21st, I'm sorry, 21st. I would suggest email me before class if there's a problem or there's something you want me to go over specifically in class. Just send an email to me, say, hey, look, Jariga, could we go over exercise, whatever, or could we take a look at this problem during class? I've looked at it and I just don't get it. That's perfect. That's actually what I'm looking for, because that's how I can assist you and the class to show you how to work the stuff. But it takes your time. You have to actually practice the stuff to know what you're not seeing. It's kind of hard to ask questions if you haven't actually practiced some of the problems yet. And so that's the point. Once you start to practice this and you get confused, that's great, because now you can start asking me you can start to focus on what you're not seeing, and that'll help me focus the class session on what you're not seeing, rather than this. I mean, I'll still try to go over all the different issues I've seen, but if you can email me or let me know even before our next session, just let me know what you want me to go back over. I'll pick a problem, I'll pick a concept, and I'll be glad to do it, okay? But that's just, as any class, it's a two-way street. You got to communicate to me what you're not seeing. But it goes back to, you can't just, put this stuff down until Sunday night and then look at a problem. And then if you're confused and you don't know why you're confused, you really got to spend time. And if you're not spending the time in the class and not studying it, then you're probably not going to know what to ask, okay? So if you can put some time in, I can help you figure out what you're not seeing. That's all I ask. Okay. All right. So I'm about 9:40. We're getting late. Are there any other questions or comments or anything that you've seen tonight on tonight's class? Is my voice coming in better now or worse?
Yeah.
Much better.
I think it must have just been some sort of technical glitch, but I'm going to try to get a headphone, maybe try that next week. I'm going to see if I can get a better headphone. They always told me the best practices, they said, is use headphones, but I was in another meeting a couple weeks ago and the host actually used a headphone and I couldn't hear a word he said. And then when he took the headphone off, I actually could hear him. So I thought, I'm not getting a headphone because I think my microphone's just fine, but tonight seems like it might, I think Jay or somebody, I think it might have just been an internet problem. I don't know. But I'm just, if that happens again, let me know during class. I'm glad you guys told me that. And I'll try to see if I can't, find a fix to it. But all right, last, I got a couple minutes, but any other comments or questions about tonight, or any issues or questions about what you think you need to be doing before our next meeting? Anything? That's fine.
No.
Everything's clear?
Yeah.
Or as clear as mud?
It's gonna try to get into this homework.
Guys, don't get frustrated, please. This
is frustrating.
I'm not rushing this chapter, okay? If you practice this stuff and you get stuck, take some notes, come up with some questions, ask me what you're not seeing. Specifically, I would say focus on the homework problems in Connect. But if that's not working for you, you can always go back to these I call them the end of chapter problems. Let me go back. This is, again, these are all end of exercises in your e-text. These are real good problems. If you try some of these, you have all the answers to these in Blackboard, but try some of these, ask questions, say, hey, look, maybe at the next class meeting, you might say, hey, look, could we take a look at problem 3.1a, or could we do 3.2a and using T accounts? I just don't get it. No problem. We'll take a look at it with you. We'll go over it. But you can see all these are just practice problems. And it just takes some practice to do it, but you all have to set up T accounts. Notice this 4a is a real long one. But that's again another good one. It covers all the different types of ways they can word these problems. These are practice. These are not graded. This is all practice. But you've got this. You could start here. You could work in Connect. But remember, the Connect stuff is not due until the 27th. So, like I said, I'm not managing your time. You guys know what you need to be doing in terms of, you got other commitments. I get that. But I'm just saying, before our next class meeting, I'm hoping you all practice some of these chapter 3 problems, or at least come up with some questions if you're not seeing it. But please don't get so confused thinking, I'm just not going to get this. You'll get it, but sometimes you just need to take a break from it, step away from it, and come back to it. Take a nap, go, get some rest. You'd be surprised when you're a little bit fresher. Sometimes it'll start to click. I've done that several times where I just get frustrated with the concept, and then the next day I'm not as tired, and it looks different. I don't know if you guys have ever had that happen, but so, all right. So anything else I can help anybody with tonight? If there's any questions, you can email me, and some of you have already done that. Daniel, I'll take a look at your chapter 3 stuff and give you some feedback in a minute. But like I said, if you ever come across an issue where you just don't know if Connect's not giving you the right amount of feedback and you want some feedback from me, you saw tonight, I have no problem with putting the actual homework problem up during our class and working it out with you. Sometimes if you think that's effective, you guys gotta let me know. All right. On the tutor stuff, there is a Blackboard connection link. I will get that to you. In fact, let me see if I can't get that onto my Blackboard site. So that way, when you log into Blackboard, you'll know what link to go to. I believe the tutor is, I think it's kind of like Zoom, but I think they give you like a Blackboard collaborate link, I think. Has anybody had any other tutors they've used with the other classes that they've had that? Well, if not, I'm pretty sure that's what it is, but I think I'm looking at one of the comments. What I'll do tonight, and hopefully by tomorrow, I'll try to get that tutor link, that link up for everybody, and I'll just put it in Blackboard, if that helps.
Yeah.
Okay. So I'll get that. Was there anything else that you would like, or you have questions about?
Well, I'm trying.
Is this Philip?
Yeah, I'm still got a problem with Connect, so that may make it difficult for me to do chapter 3.
So Philip, you can't even access Connect?
Well, I think that's mainly because I ended up doing it at the public library instead of here at my house.
Do you have the Connect rep that you can contact? Sometimes they can take a look at your account. I know I sent something.
There was an option. I did come across an option that says about changing the password, but I'm not sure what that meant.
you might have somehow, if it might be if it's a password issue, typically what happens is you can reset it by they'll send the password reset to your email.
And I can just put that in as the.
Yep.
Okay.
Why don't you try that and see if that works? If not, email me, okay?
All right. All right.
All right, and anybody else, if it's a connect access code issue, whatever, I can work with you on your dates on the
I
extension.
had a similar problem with my Connect, and it was two problems. One, their server was down, but it told me the same thing, that my code had been used, and it was that I had tried to set it up multiple times, and the system had saved multiple username or passwords, and I had to go back through and click through them one by one and figure out which was the correct combination for my login. Because once you punch that code in, it's attached to a specific login account.
And was that connected to your same email?
I used I actually put the email in wrong was the problem. I typed it in wrong when I made my account, and then I was trying to put in the correct email, and it was like, oh, like username not found, account not viable, and I had to go back through my history on my computer to see what I had plugged in. And
Wow.
So now I log in using an email that doesn't exist, but that's fine. I mean, it's fine, it works, but I was like in tears. I was in tears on chat with the Connect people, but it was completely my dumb user error fault.
Well,
It was like, it was on me.
Well, but even so, I mean, sometimes there's certain systems that even if that happens, it shouldn't be, there should be a quicker fix to it, in my opinion. I mean, because you guys are the users, we're all users, and we've all done something weird where we click a button and we're like, oh, shoot, I shouldn't have clicked that. And then all of a sudden, you're going to go back and reset everything. And then you've got due dates coming up and you're panicking about that. So again, if, you know, like Philip or anybody else, just, if it's an email issue and you can't get it resolved within a day or so, just let me know. And I'll try to get my textbook. I've got a really good textbook rep. She's really nice. I can try to get her involved, and she could probably get you a contact that could actually work with you individually on that.
Their chat people are really, really nice and very, very patient. You can go to like, there's a help, like a live chat, and they're very patient.
All right. So Philip, you could try that too. When you're on the website, usually there's a chat feature, and if you have an issue you can't find it, just let me know. But I'm guessing with yours it might be a password issue. But if you can't get it, let's say by tomorrow, I know it's almost 9:50. If you can't get it by like tomorrow, let me know, and I can work with you on that. All right, guys. It's getting almost at 9:50. So let me sign out here in a minute. And like I said, I'll have another posting of an announcement up. But again, we'll meet again next Monday. You know what to do for Sunday, your chapter 2 assignments if you haven't submitted them. And then by our next class meeting, we're practicing debits and credits. Come prepared to ask me questions. It doesn't matter. I want the feedback. I want you to ask me. It's not a bad question. Let me know if you're not seeing it. Don't be afraid to ask. I'll try to help anybody that needs some help with this stuff. Okay. All right, guys.
Thank you.
All right, so I will sign out. And we'll see everybody within a week. Okay, sound good?
All right.